This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I didn't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, still on a cruise, three-island tour, the Minnow. Hope he's okay. He's with Tina, so he's okay.
He's good.
Lisa Mateo here with a very busy morning. Walmart, we're going to get right to it in a minute, down 7% right now. Coming up, a conversation, our Anne-Marie Horton and Company, in conversation with the Treasury Secretary of the United States here at our world headquarters, an important interview, the news flow out of Washington.
Yep.
Paul, just incredible.
Just incredible. We're staying on top of it, Tom. And again,
story to story. That's all you can do.
That's what we do, and that's what the markets are doing, Tom. Here we got a little bit of red on the screen here on the futures, down about 0.25% on the S&P here, Tom, in this early pre-market trading.
We say good morning on your commute, frigid commute here in the east with snow, extensive. Montreal with tons of snow. Up in Quebec is generational snow. Bloomberg surveillance this morning. We're brought to you by IBKR. Well, the U.S. CPI will it exceed 2.4% in March of 2025? Trade. Your prediction with IBKR Forecast Trader. The yes was recently at 60%, 6-0. Buy yes or buy no and earn $1 if you're right. Go to ibkr.com/forecast. There's a red headline. We have in the headline stream that Matt Winkler and Company invented. Awesome. A red sticky is what it's called internally. It's a bright red headline, so even a dummy like me can see it. Look at that annual dividend increase.
Yeah, Walmart raising the annual dividend 13% to 94 cents per share.
That's called double digit.
Yeah, that's big.
CFA level 4 got
exactly,
me that.
But not enough because the earnings forecast disappointing, and we'll have some news on that. But,
coming back a little, but like from a 104 down to indication 96 shows you that down 7% from so we say good morning with futures at -16, Dow futures at -114, the VIX 15.62. Let us join the conversation, our Anne-Marie Horton, John Farrow, and Lisa Abramowitz with the Treasury Secretary.
Everything that President Trump's administration is doing will be disinflationary. We're going to bring down energy costs. We're going to bring down regulation. What DOGE is doing in terms of cost cutting. And I think once the Tax Cuts and Job Act is made permanent, then we can have a revenue increase, cost decrease. And as you said, as the nation's top bond salesman, I got a pretty good story.
So what's the medium term? Help me understand that. What is the medium term? And then once you see all those things, let's say those ambitions become reality, then do you start to think about terming out the debt?
Sure, but that's a long way off. And we're going to see what the market wants. As Lisa noted this morning, and it's fun to see someone who believes that Fed minutes are exciting. That the Fed said that they may stop their balance sheet runoff. So, easier for me to extend duration when I'm not competing with another big seller.
So when do you think that time would be? End of the year or further down into the administration's term?
Yeah, it's going to be path dependent. We're still seeing sort of the residual Biden inflation that's still coming through. And I think as the market starts to realize what we're doing and inflation starts to drop, then we will see. So it's going to be path dependent. That's the eventual goal, but I'm not going to signal it now.
When you mentioned the Fed minutes, participants indicated yesterday that one of the problems they had was they were waiting for Trump policies to come into place. Do you think that those policies, when you think of tariffs, potentially deportations, immigration, this can be inflationary? Is it going to hold back the Fed from cutting rates?
Well, to the extent that team transitory at the Fed is still has any credibility, I would say that tariffs, if they have any price adjustments are the most transitory thing there are. So I don't think that should hold them back very long. And I would point out that depending on what number you want to use, 10, 20 million people who came across the border, we had the worst inflation in 40 years when we added 10 or 20 million people. So I'm not sure why people are saying that it's inflationary to tell them to go home.
So when you look at team transitory, do you think the next move for them would be a cut?
Anne-Marie, I have said publicly that I will talk about what the Fed has done. When I was a market commentator and investor, I would talk about what they should do. Now I will leave it to them, and Chair Powell and I have a weekly breakfast. We saw each other yesterday, and I will convey my thoughts there.
Well, let's talk about what they have done. We can comment on that. You've said you're willing to. They cut rates 100 basis points going into the end of last year, and an odd thing happened. Yields at the long end rose. They didn't decline. Do you think Federal Reserve easing contributed to higher long end yields?
Well, Jonathan, I would just say the point of cutting rates is to cut rates. So if they cut rates and rates went up, then there probably was something there. I thought that the rate cut in September, I said it maybe even on your show here, that it was oversized. The market responded, but now we're seeing term premium come back down. So we'll see what happens from here.
Do you think the current rate right now is enough to bring down 10-year yields over time just by virtue of being restrictive?
Again, I'm not going to comment on current policy.
I am curious. You talk about how you do look at the 10-year yield every single day. I love that. I love that you're the top bond salesman in the United States. And I'm wondering, are you expecting it or hoping it to go down from here? Is that necessary to achieve your 3% growth target?
Well, what's necessary are the underlying conditions. So the underlying conditions that we need for yields to come down, for growth to go back up. We've got this affordability crisis in housing. We've got an affordability crisis in the auto payments. So one thing that would be very stimulative, and as Jonathan mentioned earlier, that 10 years come down, or rates have come down every week since Donald Trump's been president. So if we can continue that for 52 weeks, that'd be great. And it'd be it would be a win for the American people, which at the end of the day, that is our goal. So if we do what we say we're going to do, if we can rein in the budget deficit, if we have non-inflationary growth, if we bring down energy prices, and I think now that I have the numbers on the inside, there was a big contributor to this massive inflation was regulation. I think you said earlier this morning that what if these things cause inflation? As Anne-Marie just said, some of the policies. Well, what really happened under the previous administration was you created a demand shock with government spending, but it was met by supply constraints as there was more regulation. In Trump 1.0, we created a demand shock with tax cuts, and it was met by a supply-side response of less regulation. So, the Biden administration created this inflation that a demand shock and constraining supply is the ultimate recipe for inflation. So.
And now you want to cut spending. The DOGE program, let's talk about it. You've called it one of the most important audits to government ever. You remember that Clinton tried something similar, the National Partnership for Reinventing Government. How different will this be? And what kind of cost savings are you and the team thinking about? Yeah,
and John, I can go all the way back. Given my tenure in the business, I can go all the way back to the 80s to the Grace Commission. And they had some great ideas, most of them not implemented. I think that the Clinton-Gore initiative, I think a lot of that was academics. So this is people on the ground, all areas of government, and it's moving quickly. And I really do think it's unfortunate that it's been lampooned and attacked the way it has. But when it's being attacked like this, it tells me that there are a lot of entrenched interest in terms, when you're moving people's cheese, they don't like it. And it's not their cheese, it's the American people's cheese.
Well, how about putting some of that cheese back into American people's pockets? How inflationary would those $5,000 potential DOGE checks be that the president spoke about yesterday?
Well, I think, again, that if we are bringing down energy prices, if we are cutting the regulation. So I think that it's to quote the vice president during the campaign, I think it's holistic, and I think that it's all kind of one mosaic. If you were to inject a lot of money into the economy, because Anne-Marie, think about this, that we are at this massive deficit to GDP, 6.7, almost 7%. So what will be happening on one side? You'll be bringing down that spending in the economy. So very easy mental model is every 300 billion is about 1% of GDP. So every 300 billion that DOGE is able to save, could you put that back in the economy into people's pockets?
One thing potentially that could happen, and people are questioning it, is maybe remarking gold. Elon Musk, who's leading DOGE, was talking about maybe going to Fort Knox to make sure those gold reserves are there. That comes under your purview. Do you have any plans to visit Kentucky?
I don't have any plans. I can tell you that we do an audit every year. I can tell the American people on camera right now that there was a report September 30th, 2024. All the gold is there. Any U.S. senator who wants to come and visit it can arrange a visit through our office.
Gold was your biggest holding when you were a hedge fund manager before you divested to become the Treasury Secretary. So you know the value of where gold is right now versus where it's marked on its balance sheet, just north of $40 an ounce. It's close to $3,000. Is it under consideration for this administration to revalue gold?
I think that somehow when we were talking about the sovereign wealth fund and I said monetize the balance sheet, I can promise you that's not what I had in mind.
So it's not under consideration, not on the table?
That's not what I had in mind.
When you look at the DOGE savings that you have so far, how much is that going to go to offset some of the tax extensions that we see? What other savings are you looking at that potentially are crucial?
Well, again, they're just getting started, and one of the shocking things to me has been, when we talk about waste, fraud, and abuse, we all think of what comes out of D.C. We think of some waste and fraud and friction costs, because one way to think about this is 25% of the U.S. economy flows through Washington, D.C. So if we can cut the friction on that, that's a lot of savings. We are discovering now, in waste, fraud, and abuse, there may be much more fraud going on than we thought. And I think you're going to be hearing about that over the coming weeks.
Can we hear about it now?
I think you're going to be hearing about it over the coming weeks.
What kind of fraud are you thinking about? What kind of fraud have you identified?
Again, I'd refer you to some.
Well, you're here now, so I want to see some of it out of you.
I'd refer you to some of the statements by Lee Zeldin at the EPA.
Okay. Well, we can build on that in the weeks to come.
Great.
I'm going to refer to you some comments from the Washington Post on defense cuts. They're reporting that Pete Hegseth, the defense secretary, ordered senior leaders at the Pentagon and throughout the US military to develop plans for cutting 8% from the defense budget in each of the next 5 years. Are you aware of that plan?
I'm in contact with Secretary Hegseth, and we're working very closely. And again, I'm not going to jump the gun here on TV, but I think everything's on the table. And can things work more efficiently?
When it comes to the defense budget, we spent more last year on our interest payments than defense. So are you hoping for 2025 to spend more on defense than the interest payments?
Well, it would depend how we got there, too. Does defense spending go down? Does the interest bill go down? We'll see what that calculus is.
Got to focus on tariffs too. Revenue raising is a part of that story. Reciprocity, national security. You want fair trade. I think we all want fair trade. The president has discussed reciprocal tariffs. He's mentioned the Europeans also offered to drop auto tariffs. Could we start there? Have the Europeans actually made that offer? Can you confirm that?
I haven't seen that, but it's possible. I think that good thing about President Trump's negotiating style is people put things that were not on the table before on the table very quickly.
So that would be reciprocity and maybe negotiating. But to offset the tax cuts, where's the revenue raising?
So there could be, not everyone is going to give on every point, right? So the Europeans seemingly put forward very quickly auto tariffs, but Not every country is going to do that. My view, as I've said before, China is the most unbalanced economy in the history of the world, and they are trying to export their way out of what is a very serious recession, and the rest of the world can't do that. They can't dump Chinese goods. They're going to have to rebalance their economy. So tariffs on Chinese goods went up 10%, and a lot of that, again, Mexico, Canada, China, that was in response to the fentanyl crisis.
China's the only one, though, that those tariffs have actually stayed in place. Is that the opening salvo? How high do you think Trump wants to go when it comes to Chinese tariffs?
Well, I'm not going to give away his negotiating hand on TV. I do have my first call with my Chinese counterpart tomorrow morning, so I look forward to a very productive discussion.
What's the first point you want to bring up?
That we want to work together. And as we said, a lot of the precursor ingredients from fentanyl originate in China. So we really want to put a stop to that very quickly.
Historically, there's been some currency concerns with regards to China as well. In the conversations we had you before taking up this post with you, you mentioned that some countries, some currencies are undervalued. Is China one of them? Is that something you'd like to remedy?
Yeah, well, Jonathan, what I've said is, make no mistake, the U.S. still has a strong dollar policy, but that does not mean that bilaterally other countries can weaken their currencies versus the dollar or manipulate their currencies. So, but specifically on China, China's a very difficult currency to value, because I really think that when we think about the value of the RMB, it's in three different equilibrium. On any academic model, say purchasing power parity, it's cheap. On the other side, you have 1.4 billion people who are subject to capital controls, and they want to get some of their money out of the country. And then you have what I would call the X factor. If you put money into China today, what's your belief that you will get it out in 2, 3, 4 years? So it's very difficult to come up with a point value of the currency.
You've talked about the desire to have a strong dollar policy for the United States, but is a strong dollar at odds with the idea of bringing industrial production back to the United States, and sort of speaks to some of the concerns about other countries trying to devalue their currencies?
Well, I think that we will necessarily have a strong dollar if we run good policies, and I think we're going to run good policies. If we cut the trade deficits, when you think about the trade deficit is a combination of terms of trade, value of the dollar, and our own budget deficit. So if we bring down the budget deficit, then I think everyone, if we are deregulating, if we make the tax cuts permanent, if we make the U.S. more business friendly, then all the reserve managers in the world, all the private investors are going to want a piece of that, and the dollar will be strong, but we will be able to push back on that through good policies, through productivity. The U.S. productivity, I think, I've been meeting with a lot of the tech leaders lately, and I think we are very close to the cusp of this AI finally coming into the productivity numbers.
Do you think that a strong dollar is necessary in order to offset some of the costs that could be otherwise associated with the tariffs?
Traditional economic theory would tell you that the dollar strengthens on the tariffs, but who knows what we've already seen since the dollar appreciation since November 5th. Markets live in the future, so have we already priced in some of that? And on the other side, what we are trying to do is to get other economies to successfully rebalance. My conversation tomorrow with and this is really just an introductory conversation, but as we go down the road, the Chinese need to rebalance their economy in favor of consumption. That they are suppressing the consumer in favor of the business community. So, as that happens, then they will increase their demand. Same thing in Europe. Mario Draghi, for any of your viewers who didn't see it, Mario Draghi had a fantastic editorial this weekend in the Financial Times where he said, look, we have put the equivalent of more tariffs on ourselves, more tariffs on ourselves than the U.S. could ever contemplate. So could you get a very strong euro if somehow they had an immaculate deregulation?
Just quickly, you're having this call with your Chinese counterpart. Will you see him next week at the G20 finance ministers meeting?
I'm not going to Cape Town due to some domestic considerations. I actually think that he's not attending either.
Is that what he's told you?
This is the readout that we've gotten.
Okay.
So, and again, I also believe several of my other counterparts won't be there. I have been speaking and in contact with them regularly, and then I will be seeing them at the spring IMF World Bank meetings in D.C.
Wanted to talk to you about national security as well, and the dollar has certainly got a role to play on that front. The sanctions policy of the United States, as we look back, do you think that's been misused, abused?
Yeah, excellent question, Jonathan. When I came into Treasury, if you think about sort of Treasury is five pieces. There's IRS on one side, the Mint on the other, but the main focus of in the building at Treasury is domestic finance, international finance. That's what I've been doing for my career for 35 years. I was able to hit the ground running on that. What we call TFI, terrorism finance, is where my biggest learning curve is. So I'm spending a lot of time on that, and I'm reviewing the sanctions policies. Why do we do what we do? Have they been effective? Are we running a 21st century program as opposed to some outdated modalities?
Well, the current sanctions are in place on places like Russia to try to get Putin to a negotiating table. You are intricately involved in this deal. You were just in Kyiv. You met with President Zelensky. Trump yesterday called Zelensky a dictator without these elections and said that he better move fast or he's not going to have a country left. Does this language make it harder for you to get that minerals deal over the finish line?
Well, look, I think President Zelensky, unfortunately, escalated and has put some daylight between...
How did he escalate?
A lot of his remarks in Munich I thought were inappropriate. President Zelensky, when I met with him, assured me that he'd be signing the minerals deal in Munich. He has not. And look, the real purpose here, and I think it's turned into kind of this media circus, that President Trump had a very elegant plan, and it was bring the Ukrainians closer to the U.S. Let's do this economic deal. And even Karl Rove in the Wall Street Journal this morning approves of it, that the U.S., with greater economic interest in Ukraine, provides a security shield. So the sequencing of what was going to happen was bring the Ukrainians closer to the U.S. Through economic ties, convince the American people and the American public, get them on side, and then tell the Russians, go to the negotiating table with a very fulsome message that if we need to, we will take sanctions up.
Well, what about tapping the Russian frozen assets, some $300 billion? Would you force your European counterparts to not just have them frozen, but actually tap them? Trump talks about repaying the American taxpayer. Shouldn't Russia be a part of that?
Well, what's happening now is they are being tapped. So the returns from
the interest,
the returns from the freezed asset pile is going to pay the Europeans. You know, what's very important to understand here is that everything the U.S. has done to date, the American people, the American taxpayer, is grants. The Europeans, roughly half of what they've done are loans, and the runoff from the frozen assets is being used to repay European loans.
Have you communicated that to the Europeans, that you're upset with them?
What's that?
Have you communicated to the Europeans that you're upset with them?
I think Vice President Vance did a pretty good job in Munich.
Do you think they understand that the United States is running a deficit of north of 6%, close to 7%, and that the budget for defense is north of $800 billion? Do you think they understand the gravity of the moment in the United States, the U.S. perspective?
Look, I think that they understand that President Trump, during his first term, this term, Vice President Vance, and the entire security apparatus have told them that many of the countries are deficient in their NATO spending, and they need to come up. When I went to Ukraine, you fly into Poland. Poland is spending almost 5% of GDP on defense. And look at Poland sitting next to Ukraine. Poland is one of the great economic success stories of the past 30 years. After China, they've had the fastest growth. So why couldn't Ukraine, with some U.S. capital, ingenuity, know-how, and root out some of the corruption, do as well as their neighbors done?
If Europe spends more, will it allow America to cut back on defense spending? Is that the ultimate goal?
The ultimate goal is for the Europeans to come up to where they've said that they are going to, and to provide their share of the NATO spending.
You mentioned sanctions. So do you have both on the table ready to go, a sanctions ramp up or wind down on Russia, depending how these talks go?
I think that'd be a very good characterization.
When it comes to the talks, Trump still thinks he's going to meet with Putin, he said, probably by the end of the month. The end of the month is next week. Are you preparing for that?
I'm not going to give away the timetable, but the president is committed to ending this conflict very quickly. And I will tell you, you're in Kyiv. I went to a children's hospital that had been bombed. And this was not a children's hospital where you take your child if he or she scrapes their knee. Like this was. So
you can imagine. I did that trip that you're talking about just a few months ago. You can imagine why they haven't had elections then, right? They're living in this martial law.
They are, it's probably necessary to move forward with the democratic process.
We've covered a lot of topics. One name that has not come up very much is Elon Musk. Let's finish there. You've had some tremendous colleagues in your experience over your career, including the great investor Stanley Druckenmiller. You've worked alongside Donald Trump through the campaign. Can you just describe what it's like to work with someone like Elon Musk, someone as successful in American business? Just what's that like day to day?
Yeah, look, Elon Musk, like Stan Druckenmiller, I always compare the great business people to great athletes. They keep their eye on the prize. Whether he's the Messi or Michael Jordan, he is focused, and his energy level is unbelievable. And he's gotten to where he has because everything's on the table. There's always this examination of why are we doing it this way? Why are we doing what we're doing? And most of all, if something's not working, let's fix it.
Sam Altman was on Bloomberg TV just 2 weeks ago and called Elon Musk insecure. Do you view him as such?
I'm not going to get into the tech magnate, kind of slap fest.
Secretary Bessent, I would say that's wise. Yeah. He is drawing criticism, though. When you and the administration come out and pick out the various things where money has been wasted on, I think we can all agree that that's a waste of money. Where there might be some concern is the way that some people are being laid off in Washington, that it lacks some dignity. Could you comment on that today?
Look, I think that there are many fine public servants, but I think that I've been in Washington 3 or 4 weeks now, and there's a real bias towards the status quo. And if you don't move quickly, then the lobbyists get involved, the entrenched interest, and it's impossible to get anything done. So, anyone who has experienced financial hardship, any kind of the mental duress, I'm sorry for them, but that's also what the average American experiences every day. Most of us, you all come to work, you want good ratings, you get a performance readout, you really push forward. And I can tell you that in Treasury, I have been so impressed with the quality of the permanent staff. And I want to get everybody back to the office, and a lot of people are on board with that.
When it comes to your prior life, you didn't have a boss. You said it would be like atrophy if you weren't trading financial markets every single day. What is it like now to be in this position where you make decisions that people can trade against what you're doing, and you also have a boss that sits pretty close to you in terms of the Treasury Department and the West Wing?
Well, look, I only had my own firm for 8 years, so I worked with Mr. Soros, with Stan Druckenmiller, and it's a great feedback mechanism. And I think I have the best position in D.C. I'm on the White House campus. We have a great staff in Treasury. I can be in the Oval in 4 minutes. And so there's proximity. And again, not like Elon Musk, President Trump is committed to shaking up the status quo. He came in with a mandate, and he's moving on it very quickly.
You're a total gentleman, and you've been very gracious with your time. Thanks for being a good friend to this programme over the last year. Secretary Bessent there of the Treasury. Secretary Bessent, thank you, sir.
A lengthy conversation with Scott Bessent, with John Farrow and Lisa Abramowitz, and of course Anne-Marie Horton driving much of our political coverage. Paul, your thoughts here. What I heard there that I think is really, really important is we're deep into 2025, and I think 30 days or so into the Trump administration, he said, I've been there 3 or 4 weeks.
Yeah,
exactly. That was maybe the most important thing I heard. Do you think have they done the curtains yet? Did they take the Yellen curtains out and put the new ones in?
Yeah, we'll see. But I think talking about terming out the debt is a long way off. Mr. Bessent said, and he says revaluing gold reserves is not what he had in mind. But again, we had a good 25, 30-minute conversation with the Treasury Secretary.
For all of you across the nation, we welcome you on your commute this morning and on YouTube, growing each and every day for us. We say good morning. What we do is deliver to you the conversations in this cacophony we're living in, the conversations that matter. Coming up, Professor Schiller is scheduled to be with us with all of her understanding of our civics and our political history. Wendy Schiller will be along at some point. We have a couple other government authorities. Terry Haynes, I saw wander by. We're trying to get Mr. Haynes back. We'll see if we get him today or tomorrow. But we have a huge treat for you in literally 3 minutes. Jason Furman will join us from Harvard University with an extended conversation. We're thrilled that Professor Furman will delay Ec 10 this morning.
Yep.
To keep the kids waiting.
Exactly.
Most of them are hungover, but we'll keep the kids waiting up at Harvard, and we'll have a really good conversation with Jason Furman. Again, with futures at -18, the interactive brokers, Bloomberg Business Flash, Lisa Mateo.
And we got all eyes on Wal-Mart shares. They're down about 8%, and this is after its earning forecast fell short. The reason why it's so big, Wal-Mart, the first big box retailer to report quarterly earnings after the holiday season. We go to stocks now. We're reading from their latest record highs, concerned around trade tariffs, kind of weighing on sentiment. I want to take a look with S&P futures because they reached another record close yesterday. S&P futures down 0.2%, but at 6,145. We go to Dow futures down 0.3%. NASDAQ futures down 0.2%. The 2-year yield's 4.26%. Little change, and the yield on the 10-year 4.51%. That's down 1 basis point. European stocks steadying from yesterday's slide. We have the stock 600 up 0.2% after posting its biggest decline in 2 months on Wednesday. The Bloomberg Dollar Spot Index down 0.2%. Minutes showed signs that the Fed is in no rush to cut interest rates. And I want to point out the Japanese yen. It's up nearly 1%. This is on hopes the BOJ will raise its rates sooner than later. Right now, it's at 150.11 against the dollar. Shares of Garmin, that was the top gainer in the S&P 500 yesterday. They're still up 12%. This is its best day since October. It's following an outlook ahead of estimates. And then shares of video game platform Vimeo and used car retailer Carvana, they are both slumping. Disappointing results. Vimeo down 14%, Carvana down 9%. That is your Bloomberg Business Report. Paul and Tom.
Lisa, thank you so much. I really need to frame this because you get lucky on Bloomberg Surveillance where you have the Secretary of the Treasury speaking, and then to follow it up with Jason Furman is extraordinary. Jason Furman has committed himself to policy. There were a few others equivalent to him, both Republican and Democrat. He's associated with Democratic politics, but he's, I think, been ecumenical, to use a word that Professor Furman uses a lot. Paul, one of the key things with Jason Furman is he was voted most handsome freshman on his dorm at Harvard. He beat out his roommate just by a little bit. That would have been Matt Damon from a few years ago. Jason, thank you so much for joining us this morning. You're in Act 10, and you have to teach ambiguity, microeconomic ambiguity, and it can go this way and that. What I didn't hear from the Secretary of Treasury is a risk of a real or nominal GDP slowdown with all the policy upset the nation faces right now. Do you see that we could have a lessening of real GDP or the animal spirit of nominal GDP?
Yeah, well, right now, the level of uncertainty is just incredibly high. That is definitely a minus for the economy. I don't know how big a minus it is, and a lot of it depends on how the uncertainty ends up getting resolved around things like tariffs, or whether it gets resolved. It may be that every month there's a new threat, it gets withdrawn, a new threat that gets made. That makes it hard to do planning on a global basis. And that's the success of American corporations, is their global reach.
Well, help us with the equation then, because everybody focuses on consumption. We do the Fed parlor game. I was amazed we didn't talk, the independence of the Fed here. We'll talk about that in a moment with Professor Furman. But ignored, Jason, as you know, is the I in the equation, business investment. As you look at CPI and analyze it, how do you analyze business investment right now in America?
Yeah, so consumer spending is the majority of GDP, but investment is the majority of fluctuations in GDP because it's much more volatile. And right now, investors, business investment is grappling with continued high interest rates, which are likely to stay that way, with an appreciated dollar, which is likely to stay that way, with uncertainty about global trade, which is likely to stay that way. On the other side of the ledger, there may be some reductions in investment, in regulations. That'll matter more in targeted sectors like energy than it does generically across the board. So a lot of cross currents right now, but from policy, they're a little bit more minus than plus on that part of GDP that is most critical to business cycle fluctuations.
Professor, the Federal Reserve is obviously focusing on inflation, and inflation was a big issue in the recent presidential election, certainly. Are you concerned that inflation and some of the policies that the Trump administration is talking about, whether it's tariffs or changes in immigration policy, could fuel another round of inflation?
I think it's certainly possible, but let's define what we mean by another round of inflation. Right now, I believe underlying inflation is around 2.5%. And the tariffs that have been done to date on China and steel will probably add about 1/10 of a percentage point to that. If you do another big set of tariffs, maybe it adds 3/4 of a percent to that. Now you might be at 3% inflation. That's a big deal for the Fed. That means they're not cutting rates. It might mean, depending on their theory about whether or not to look through the price level change, that rate increases are back on the table. But that isn't necessarily a huge thing that consumers take note of. I don't know how much humans notice the difference between 2.5% and 3% inflation, but the Fed certainly does.
Right. Professor, you and I think much of our audience grew up with this whole concept of internationalism, globalization. Is that still a thing these days, or is kind of everybody just kind of trying to onshore or friendshore everything these days?
Look, I'm unapologetic in my enthusiasm for globalization. It's done enormous things for American consumers, American producers, the strength of the United States. There's no question that politically it's on its back heel right now, but it is such an incredibly powerful force that to me it's much more like a dandelion that will grow no matter what the conditions are than it is like a fragile orchid that needs to be watered in just the right way. And look, there's been some feedback in the system. If we had tried to put 25% tariffs on Canada and Mexico, it would have been horrible for the U.S. auto industry. I think that might be part of why it didn't happen and part of why I hope it doesn't happen.
Jason Furman with us, folks, on your commute across the nation. Good morning. I'm Bloomberg Surveillance, and on YouTube, thank you for letting us be in your living rooms, your offices, as well. Even some people in their cars watching. Sure. I don't know. I'm not sure about that. Jason, I got to go back to where we are. I want you to take a bigger picture here. Like, look at the Washington Post, look at the cacophony of Bloomberg opinion, etc. I got Treasury secretaries. I mean, I know you go back to Albert Gallatin. Forget about that. I got Robert Rubin and a guy named Summers who used to sign your paycheck. I got Jack Lew. I got James Baker and company. I mean, the Treasury Secretary is at the fulcrum of our executive, legislative, and frankly, judicial branch of making it work within our financial system. Are we at risk now that that financial system is run out of the Oval Office? Do we have a Treasury Secretary who's so diminished that he really can't affect Furman-like policy?
I hope not. Scott Bessent is a smart guy. He's a talented guy. If this policy making were delegated to him, I wouldn't agree with all of it, but I wouldn't worry fundamentally about being in deeply unsafe hands. But yeah, the tariff calls are being made out of the Oval Office. The calls about the Fed are being made out of the Oval Office. You see Scott Bessent one moment saying, we're comfortable with the Fed because we're focused on getting down the 10-year, which is a great thing to say. Absolutely makes sense. Right. And then the next moment you see Donald Trump commenting on the Fed funds rate, seemingly oblivious.
We're going to rip up the script right now. We could do this with the future vice chairman or chairman of the Fed. Could you see Governor Furman?
Sure.
Come on, let's cut to the chase, Jason, right now. We're beginning to see the percolation. I don't want to editorialize here, folks, of Fed independence. We go back to McChesney Martin. We go back to LBJ, where he took McChesney Martin's ears and picked them up like the dog back then. Jason Furman, is this Fed at risk of its independence?
Look, I'm nervous. So far, I'm a little bit reassured. They had a sweeping executive order about independent agencies and presidential control, and they explicitly included an exception for monetary policy and for the FOMC. It's also hard for them to do anything about it because he only gets 2 appointments over the next 4 years. I hope the courts would not let him fire Jim Powell with no reason. But, but I'm nervous. To me, it's a tail risk. It's not the most likely scenario, but this is the best economic institution we have. So, 2% chance something happens to it, we should be concerned.
In your youth, you had to carry water from the executive branch over to Capitol Hill. How do you frame in your head that the legislative branch, when they choose to, rebuts a unilateral Trump policy? Do you see this as given committees? Like I think of armed services and Putin. I'm making this up, folks. Stay with me. But Jason, the basic idea is, what's the Furman mechanism of how the legislative branch responds to this moment in our history?
Look, when your party's in power, you're frustrated by checks and balances. You're like, why can't we do everything we want to do? Then when the other party's in power, you're like, hey, I appreciate these a bit. I don't want them to be able to do every single radical idea that they want to do. And, I think you're going to see maybe less checks and balances than I might like coming from Congress, but still a decent amount of them. And some of that inertia is bad. It means we're not going to get done things we should get done. But a lot of that inertia is the inherent conservatism of the American system, where you don't make large, radical, dramatic changes, because conservatives themselves, since Burke, have understood that that's a recipe for all sorts of problems.
Jason, as you sit back here and you look at some of the economic trends, economic data points coming out here, what is the biggest economic concern for you for this U.S. economy?
I just have the conventional one, which is this stubborn, persistent inflation and 2.5% underlying inflation. If it's down 0.3, we're golden. If it's up 0.3, we're in a certain amount of hurt, and everything else is humming along basically just fine, assuming we don't have very disruptive policies.
Thank you so much for your interest across the nation today on YouTube. We are commercial free in this hour. A conversation with the Treasury Secretary, with our Anne-Marie Horton. We're honored to bring you Jason Furman from Harvard University. Wendy Schiller will join us from Brown University in a moment. Never in the history of media has there been a joint conversation, Harvard then Brown, Brown then Harvard.
Exactly.
And we're not asking either of them about the hockey game.
The hockey,
today.
exactly.
Furman has tickets. You should see where they are. One more question, please, to Professor Furman. Paul Sweeney.
Professor, Ec 10, Principles of Economics. How do you frame out in the tariffs unit? What do you talk about about tariffs? How do you teach that? What's your thoughts there?
Look, I'm nervous about that. I'm doing that in about a month. I'm going to do it the same way that I've
Tom and I will come up.
Same way that I learned it decades ago. But it's going to sound like a rebuttal to Donald Trump. Every single sentence is going to sound like the only reason I'm saying it is because I want to contradict him, when the only reason I'm saying it is that's what's been in the textbooks for a long time, and it's been in the textbooks for a long time for very, very good reasons, some of which were even grounded in things like accounting identities, which I'm 100% sure are true, and not every comment President Trump makes respects them.
Do you have a magnitude tip point on percent of tariffs? Just ad hoc, I'm talking Krugman, Furman here, bring over like Glenn Hubbard, even in Columbia. Jason Furman, is there a percentage tip point where a blended rate of 2-3% comes up and it's oops? Where's that number?
Matters a lot who they're on. Canada and Mexico matter just so much more than any other country. You do 10% tariffs even on the two of them, and an awful lot of the way U.S. business is conducted, U.S. employment happens, gets disrupted, frankly, to the benefit of a number of other countries.
Jason, thank you so much for your generous time this morning. Matt Damon will be with us here later this afternoon. Carol Masser and Tim have Matt Damon this afternoon to talk about Furman.
They always
Damon
get the
at
stars.
Harvard a few years ago. Jason Furman. Matt Damon was not the roommate of Wendy Schiller. She joins us right now. We welcome all of you across the nation. I really want to emphasize Wal-Mart down 7%. The margin was sort of there.
The guidance,
right?
Yeah. And that calls into question, Tom. Anytime we talk about Walmart, we talk about the U.S. consumer here. So is Walmart seeing something that maybe the backward-looking data is not seeing? So
there is a doorstop out there. It's a kind of paperback book, paperback novel, paperback writer that you hold a window open in a Rhode Island beautiful summer afternoon.
Yep.
It's 720 pages, and it's called Gateway to Democracy. Gateway to Democracy. One of the authors of Gateways to Democracy, an Introduction to American Government, is Wendy Schiller of Brown University. She's been very patient. Wendy, first of all, thank you for your patience with the Bessent interview. Greatly thrilled that you're with us today. Wendy, you and I, Lisa Mateo, and all of our listeners and viewers have never seen this. Where are the checks and balances that you write about in your classic Gateways to Democracy?
Well, we're not seeing them yet. Good morning, Tom and Paul. But we're seeing some simmers, right? So Governor Kathy Hochul, I think some of you might have caught that very viral clip now. And just to see that the Democrats are now the party of states' rights and the Republicans are the party of federal overreach. Now, when I say overreach, I'm not, you're cutting the federal employees, maybe you're cutting federal spending. We haven't quite seen that yet materialize. But this is an extraordinary flip from what we've seen in the last couple of decades. And it's an earthquake in American politics to see this flip where Democratic governors will be saying, we are defending our state prerogatives.
Somebody said to me yesterday, stopped me, and they said, who are you watching more than anyone? And I said, the minority member of the Senate Armed Services Committee with his military credibility, Senator Reid of your Rhode Island. Can the committees come to the rescue, both Republicans and Democrats? Is there a committee coherence and strength, Professor Schiller, that can bring checks and balances?
Well, the issue of saying rescue, this is the whole point. I mean, people are saying, oh, this is getting very shaky and scary when, the president's tweeting that he's the king. But on the other hand, Trump is excellent at political theater. So, what is actually a threat to civil liberties? What is a threat to the freedom of the press, your freedom to have financial independence, what are those actual federal threats right now versus what the appearances are, what the rhetoric is. And until they catch up to each other and the American voter feels concerned or feels threatened by the Trump federal government, I don't think you're going to have a lot of legs to stand on. I don't think you're going to have a lot of leverage to generate public opposition. And without public opposition in those red states and those red districts, I don't see the House or the Senate standing up and opposing this president, except they will use the debt ceiling, I think, as leverage. Maybe not in the House, but I think in the Senate, they'll say, listen, we don't want to crash the economy, but there's got to be a limit. And you're seeing grumblings already in the House GOP on the extent of cuts that they're proposing for this budget deal. Remember, the government has to get funded again at the end of March. So really, the fundamental congressional tool to fund the government, even if the president changes how he's spending the money, is still their leverage. And, 6 weeks from now, things could look quite different in terms of the pressure on them to stop some of these Trump initiatives.
Wendy, are you surprised that we haven't seen a Democratic voice rise up to challenge President Trump on some of policies, maybe some of the rhetoric? It doesn't seem like there is a Democratic voice.
Again, there's two things, Paul. What Kathy Hochul did was in direct result to an action that affects New York City.
Yep.
A lot of people live in New York City. So, she got a big state, a big megaphone, a big media market. So when there's that opportunity, I think you're going to start to see a more Democrats get out of the gate. Remember, 26 is looming for re-election, 28 is the presidential race. So they're going to get out of the gate when there's something Trump does that they can latch onto that won't be popular with their state. And if it's a big state, that's going to get a lot of attention. Otherwise, it's like whack-a-mole. You complain about one thing and then they'll just move in and focus on something else. So I think the Russia-Ukraine, let's watch to see what the Republicans do in the House and the Senate. If Trump shows real signs of abandoning Ukraine and just giving it away to Russia, I think you will start to see some noise, not only from Democrats, but also Republicans.
Well, let's go to that issue, because that's certainly been in the news over the last several days here. Are you surprised at the way President Trump is approaching this, seemingly pro-Russia, perhaps abandoning Ukraine to some extent, it seems like in some of the reporting? How do you view that?
I view it in the very macro sense that Trump does not have the allegiance to an ideology like George W. Bush, somewhat Barack Obama, but really Bush and maybe Biden, of what the role of the United States is supposed to be in the world. He doesn't believe that it's worth it to the United States to go protect other countries around the world. I've quoted John Quincy Adams a number of times, Tom, right? Don't go in search of monsters to destroy. So this is his position. He doesn't have this ideology, and he doesn't think the United States should do it. I don't know if it's Russia per se. You can say he's in love with Putin, but he's like this around the whole world. Why are we paying? Why are we sending our troops? They're about to propose cuts to the defense budget. I haven't seen Republicans cut the defense budget ever. So this is a real sea change in how he views what the United States is responsible to do. Does it make us more dangerous? You can argue yes, but has it made us more threatened yet?
Right.
No.
This is what we invented, folks. Bloomberg surveillance. We go beyond the standard conversation, a conversation with the Secretary of Treasury. And this hour, thank you, Anne-Marie Horton, for that. And then Jason Furman of Harvard University, and now from Brown University, Wendy Schiller with us. Professor Schiller, I was reading of Dean Rusk the other day. Of course, from another time and place, many of our listeners won't understand the quiet and the cadence, the pace that Dean Rusk brought to JFK and to LBJ as well. Do you look at the cacophony now as a one-off of a specific president, or do you look at it as this is a continuance, a new form of dialogue? Is President Trump here a one and unique president, or is there a follow-through here for a new Republican Party?
Well, I mean, I think given the loyalty that the Republicans have shown in the House and the Senate to President Trump already, whether that holds, we'll have to see. I think it's a new Republican Party. It's a get on this bus, be with us, or get out. And and they're counting on this to resonate with the American people. So far, his approval ratings are holding. I've always said when they start to drop, he'll change course. But it's a fundamental shift in how they view the United States power and what to do with that power. And they still have the responsibility of delivering to the people who voted for Donald Trump when he said he would make things better for them. And, not supporting Ukraine doesn't actually make anything better for the United States. So how is he going to deliver on that? And we've got months to go before we see the results of that. If he falters and he doesn't make things better and his approval ratings drop, you'll see the same splinter in the Republican Party you've seen for the last decade.
And Paul Sweeney, David Gura brought this up. And, let's be direct here. Mr. Trump got, let's just round it off, folks. Don't give me grief, 50% of the vote. But what percentage of that drifts away from the core Trump supporters? That's a mystery into Q2 of this year.
Yeah, absolutely. So, Wendy, what do you think is the next major challenge or opportunity for President Trump as an administration? Is it the funding of the government, some domestic legislation, or is it maybe Ukraine? What are you looking at as a next big issue for this administration?
Well, the one thing to understand about Trump that we've seen is that his attention span is pretty short, but that also makes him a multitasker, right? He'll go from one to the next, to the next, to the next. He wants to be busy doing things. So I don't think it's exclusive. I don't think it's mutually exclusive to think about the budget and Ukraine. But I do think that we haven't seen any major impacts except for the people who are losing their jobs on a daily basis from the federal government. We haven't seen the impacts. When the impacts come, when the cuts hit, this summer, maybe this fall, when the education department cuts hit for people going back to school next year, that's going to affect people's daily lives. How they respond is and then how Trump responds. Does he think he wants to run again, even though constitutionally he cannot be elected? Doesn't say he can't run. Can't be elected to serve more than 2 terms, then that changes the ball game also. So it's a time of great uncertainty, and I think, does that affect investment in the United States? Do they think that it's still a safe economic bet with such a chaotic president? We're about to see that in the next couple of months.
I was thinking of Jonathan Fenby and all that he's written about France, Professor Schiller. And I guess as a general apolitical statement, folks across the nation, Europe's got to get its act together. Wendy Schiller, do you see any ability in your study of our history, our modern Western civilization, that Europe can, quote unquote, get its act together?
Well, Europe rebuilt after World War II, as most people know, with a tremendous amount of help from the United States.
Yeah, come on. I'm going to stop
we know that,
you.
but here's the thing to remember about this Trump Republican unity and the swiftness of all these changes. Europe has parliamentary democracies. The prime minister, when they were in control in the party, that he controls, mostly he, not always, controls all party policy, all government policy. They change everything when they win the government, and they see if it works, and people say they like it or they don't, and then they get thrown out. We are now verging into that kind of single party dominance in our federal level. We're not used to it. So to say that Europe has to get its act together, we're veering towards a political system that looks just like Europe in the way that policy changes so swiftly. So it's going to be us that has to adapt, us that has to get our act together to the kind of government that we're seeing right now.
That is the single smartest thing ever. Whatever your politics, folks, what Professor Schiller just said about the wars and the roses and the parliamentary systems of Europe versus here is more cogent than all the babble you're hearing, including on this show. Professor Schiller, thank you so much. Really, really appreciate that. Bloomberg surveillance this morning. We're brought to you by IBKR, always IBKR, with the average U.S. temperature this February of 2025. Will it exceed 36 degrees Fahrenheit, not Celsius, Fahrenheit, 36 degrees Fahrenheit. At IBKR Forecast Trader, the yes was recently at 44%. What's your take? Trade your prediction. Do that at ibkr.com/forecast. Wal-Mart, you think on the conference call they're going to ask them about the parliamentary system of Europe? I don't think so.
I think they're just going to talk about this this forecast of lower than expected profit for the full year. They're citing an uncertain economic environment. I guess if anybody can cite an uncertain economic environment or a good economic environment, it's Walmart. I mean, it touches more Americans every single day than Walmart.
Let me editorialize. We did not hear that from the Secretary of Treasury. Possibly the gentleman from Harvard said the word uncertainty.
Yeah.
Like it's there.
Company Walmart expects overall net sales growth of 3 to 4% for the upcoming year, lower than the 5% growth seen in the last fiscal year.
I can't do the math. Do the math for me. Are we down 7 or 8% on Walmart?
Use the BQ function. That pops
I don't know how
right
to do that.
Up there.
Does it really?
And it is minus 8.2%.
How do you do that?
BQ. It's a Bloomberg quote. It is the best quote on the Bloomberg terminal.
BQ.
Yeah, the Bloomberg quote. I love that. Somebody. I'm going to give it
there
Tom
it is,
on the
8.24%.
Tom on the fifth floor probably correct. created that way back in the day.
Yeah, Mike stopped me in the food court. He said, "You got to get back to some courses. There's just not enough function to it."
I know exactly.
He just said, you're not there. Okay, we played Canadian music yesterday. There's a big hockey game tonight in Boston. Good morning, 92.9. American music today. Good morning. They killed it at Fenway years ago.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr on a cruise, Lisa Mateo on a cruise, too. Where was she for the newspapers? We'll do the newspapers tomorrow.
Exactly.
We had to leave, with all the conversation we had. Lisa, are you okay over there that we missed the newspapers?
I'm recovering. I'm hurt emotionally.
You're handled by CAA in L.A. Do you have them call in today and have a Mateo tantrum?
Exactly.
Is that how it works? Lisa Mateo with us, and she'll be some important news here, and particularly in Wal-Mart. You really wonder if that's a precursor down. I have the BQ screen up. 8.19%.
Yes,
wise guy.
There you go.
Got it. Lakshman Achathan with us in these tumultuous times. We'll do that in a moment. Bloomberg surveillance this morning. Again, we're brought to you by IBKR, the support of Interactive Brokers. IBKR, will the U.S. CPI, will it exceed 2.4% this March of 2025? Trade your prediction. With IBKR forecast trader, the yes was recently at 60%. Buy yes, or you can buy no and earn $1 if you're right. Go to ibkr.com/forecast. And now with an extended Interactive Brokers Bloomberg Business Flash, Lisa Mateo.
All right, and I want to start with earnings because they came in fast and furious this morning, but we had so much going on. Let's kick it off with Wal-Mart. Its earning forecast fell short, so those shares down 8%. Then we go to shares of Wayfair, down 7%, wider than expected fourth quarter loss. Hasbro Toymaker up 2%, fourth quarter adjusted EPS beat expectations. And then we go from retail to fast food. Shares of Shake Shack, they are lifting up 9%. People love their burgers after reporting strong financial results for Q4 and also fiscal year 2024. All right, now let's get to futures. We'll start with the S&P futures down 0.2%, 16 points. Dow futures down 0.2%, as well as NASDAQ futures. We have the 2-year yield 4.25%, down 1 basis point. The yield on the 10-year 4.50%, and that's down 3 basis points. To commodities, geopolitical tensions lifting gold prices to a new record. I'll point out COMEX gold $2,962 an ounce. Over to oil, Brent crude $76 a barrel. I know. The Bloomberg Dollar Spot Index down about 0.2%. And we can't forget, in about a half hour from now, initial jobless claims. That is your Bloomberg Business Flash.
Thank you.
Why did I buy copper? Mike McGlone told me long ago to buy copper. I haven't bought copper.
It's like linked into China. That was my first question to the wise one. Lakshman Achathan with us with economic cycle research. Jeff DeGraff, completely different planet than you. He's on Jupiter, you're on Saturn, whatever.
Okay.
But you both are looking at China. Mm-hmm. Copper's a proxy for China. Does your cycle research say finally China up?
No, it doesn't say that yet. But we don't need it to. I think that's what's the very interesting thing. Away from the headlines, and there are plenty to distract us, we're watching global industrial growth and long leading indicators, short leading indicators, and now you're seeing even the global PMI getting a little traction. So without China, we were very constructive on global industrial growth turning up. If China comes in, and we're watching that like a hawk with our leading indicators of Chinese industrial production, if that begins to turn and go up, then you have the global economy firing on all cylinders on the manufacturing sector. This is sector specific, not country specific. Very relevant for sensitive industrial materials price inflation. That's a mouthful there, but that's copper prices, that's metals, that's energy. These things we think look pretty constructive.
This is a theme at Q1. We're getting this little percolation
I didn't know
thing
this.
going.
I didn't have a good feel for this. So global manufacturing finally recovering. Mm-hmm. I think of Germany. When I think of manufacturing, who manufactures good stuff, big stuff? I think of Germany. I see the DAX up almost every day now.
Well, look, I'm oversimplifying, but just to recall, months ago we were saying U.S. looks good, Europe's kind of muddling in the middle, China looks bad. Yep. Okay, that's the global economy. So U.S. exceptionalism on a cyclical basis. And now with Europe muddling in the middle and a global industrial upturn occurring, you do think about Germany. Germany's tethered to China.
Yep.
And they've got issues with autos. So it's not that there aren't problems there, but if you're a value investor and you're looking at these, long-standing industrial bases sitting there, you might start to look around because a cyclical upturn in global industrial growth will lift all boats. It is the one place where we're interconnected. We're not. We all rely on one another to make something. If you're looking at your computer screen, it wasn't made in one country, your computer or your tablet or whatever.
I looked last minute where you mentioned the headlines in the news flow and Secretary of Treasury on and Furman and Schiller on. I mean, our heads are spinning right now.
Yeah.
When Geoffrey Moore invented this chemistry, did politics, did emotion, did the human condition fold into cycle research, or is it sterile? Are you removed from the zoo?
We're objective. We're human, but we strive to be objective, which is very difficult because fear and greed are in all of us. So the psychology is a component of the drivers of the cycles. That said, the cyclical move that is underway, let's say global industrial upturn, it can't be knocked by policy immediately. Right? If you think of '85, you had the Plaza Accords. We strong-armed Germany and Japan to strengthen their currencies. It's not that didn't have an impact. It did, but it didn't put them into recession. It took 5 years. So you can have policy manifest in this cyclical outlook, but it takes time. It's like a supertanker changing direction.
We interrupt this program right now with an important news flash. Good morning, 92.9 FM in New England. Paul, the temperature in Poultney, Vermont just went from -1 to the big O, 0.
Oh.
Lachlan, in Poultney, Vermont, in the hinterlands, when it's -1, do you sleep in from your algebra class?
No.
At 8 o'clock?
No. You put on your barn clothes and you go out and muck the stalls.
And then you go to algebra.
Then you eat a big
breakfast.
A manly breakfast.
Not like a Lisa Mateo breakfast.
No, lots of syrup. And then you're off to algebra and to thinking about the world and looking beyond the headlines. And I got to tell you, everything's a mess. But if you're in a free market economy, the cycle is a constant. And that gives us some guideposts. I'm not saying we know everything, but directionally, I feel pretty confident about global industrial growth at the moment.
Even with all the talk coming out of Washington about tariffs here, tariffs there, how do you guys think about tariffs? How does that factor into your economics?
Well, look, it will factor in. We're looking at market prices. We're looking at surveys. We're looking at actual leading indicators of hard data, actual indicators. So to the extent this impacts growth and inflation outlooks, it will factor in. I'm telling you right now that the U.S. economy remains resilient. I was listening just now to the earnings that Lisa was sharing, and there's ups and downs. There's lots of gyrations, but headline consumption, solid. Is it a K-shaped recovery? Absolutely. Are wealthier people consuming a ton more? Yes. And the lower end struggling? Of course. But what does it add up to? A very resilient U.S. economy for the time being.
Is that K-shaped economy, how long has that been with us, do you think?
It's been around. I mean, it's not. It ebbs and flows. With jobs holding up, you can continue it. If the job market were to crack, and you had job losses, then that lower end of the K stumbling will really impact the overall economy. That's not happening here.
Tom, when I go to Putney, Vermont, I go to the Mockingbird Tavern. That looks like my kind of place right there.
It is.
Oh my gosh, that's
no,
set me up right there.
The kids are at the Putney General Store having hoagies.
Yeah,
that's where they are.
yeah. Okay, we're gonna run here, but I got one more question. I just think is profound. Fold this over to the policy ambiguity that with all that's going on, we get a slowdown in economic growth. Do the lines in your reports suggest that yet? I don't hear it from you.
Look. I'm not saying it's running away, but I would pound the table on resilient for the United States. And I think the feature of 2025 is a global industrial upturn. So inflation's sitting there being sticky. What could get interesting is headline could tick up and down here because of energy and goods becoming firmer, even if services eases a bit. I don't want to get too distracted by the headlines. I want to get my direction
Loving
correct.
this. Yep. That's great. Thank you, Lachlan, so much. Hotel Vermont this morning. You're going to be quick here and get Andrew in here. But the Hotel Vermont this morning, you start out with the oatmeal. It's a manly breakfast.
Sure.
You know, that's your warm up to the red flannel hash, the Jericho Settlers Farm beets, potatoes, Montreal spice brisket.
Oh man.
Talk about mystery meat. 2 eggs any style. Think what they cost.
Yep.
Red end toast. In Manhattan, that's a $45 breakfast.
Exactly.
We're popping 20 in the great state of Vermont this morning.
I love Vermont.
It's great. Hotel Vermont, thank you for sending that in today. Lachman, thank you so much. And really, to hear that optimism about global manufacturing is a breath of fresh air. Mr. Achestan with ECRI, Economic Cycle Research Institute. There's a weight to the tape. Futures at negative 18. That came on abruptly at 700 when Wal-Mart came out. They raised a dividend. That's usually what you do when you have no forward guidance. That's certainly what we saw today.
Yep.
Down 8%. You're enjoying from a 104 down to, 95. And as I mentioned yesterday, Paul, I got a PE on market close of 43.
Incredible. I mean, the stock, I don't understand. The stock over the last 12 months, Tom, Walmart is up 77% over the past 12 months. I mean, what incredible run.
Did you see how Boston University won the Beanpot?
Did they?
That's because it's V. Bodie.
Okay.
He teaches corporate finance up there.
Okay.
And, iconic. I think he's emeritus now. I can't remember. I'll have to check that out. But Professor Bodie would look at this and go, okay, how do you grow at 3%, 5% on the dollar down the income statement and pop a 42 multiple?
Incredible.
And I just don't,
It's the e-commerce part. I think it's such a great story how great Walmart.com has been vis-a-vis Amazon.com.
Okay. Shall we talk yield? Let's talk yield. Andrew Cizorowski with us with Morgan Stanley. We're thrilled he could join us today. Strategic Income Fund portfolio. Andrew, how are you being strategic given the noise out there right now?
No, thanks for having me. So I think, look, when you look at where yields are today in the bond market and where spreads are, you're not being paid to take a lot of credit risk at this time. So I think it's kind of keeping it simple and just collecting carry, but collecting carry in some of the safer parts of the market. We talk about kind of mortgage rates at 7%. Well, that's a rate that we want to lend into and not be a kind of a buyer at, but you want to be a loaner into that market. So agency mortgage-backed securities, non-agency mortgage-backed securities, you could take the other side of that 7% mortgage rate and essentially clip that carry while you wait for spreads to potentially widen out in other parts of the world.
Hey, Andrew, talk to us about just credit risk and just on the fixed income side. I mean, a lot of folks are very happy just sitting there with 4.2, 4.3% on the 2-year Treasury. How do you think about just risk in general these days?
Yeah, look, I think while spreads are tight in general, I think it's going to be an environment that's going to be okay for corporate credit risk. I actually see spreads going tighter from here, and I think what we're going to end this cycle with, going from the 5th or 3rd percentile in credit spreads to kind of all-time tights if we're not already there in certain sectors. So, and I think the reason being is we, as your kind of last guest mentioned, we have a resilient economy, and I think that there's going to be a tailwind, which is kind of lower Treasury yields, lower funding costs for these corporations. That's going to provide a tailwind. We also have other things coming down the pipeline that I think will be good for risk assets in general. Yesterday, you had the Fed minutes come out, and it looks like maybe there's a sooner end to quantitative tightening than previously thought. And so those things will be positive for risk assets. I think you do want to just move out of just 2-year treasuries, though, or T-bills. I think you want to kind of term out that debt and lock this in a little longer. Our kind of favorite part of the curve is that kind of 3 to 5 year point.
Do you see the street? I mean, with all the heritage of Eaton Vance and Morgan Stanley, are our listeners and viewers under duration? Are they all way too short?
Look, I think there's a lot of people that were burned in 22 and early 23.
Yeah, I'll say.
Yeah, so they're hesitant to go into that market. I think where they can take some comfort, though, is the fact that the reason bonds didn't act as a hedge in 22 and 23 was because inflation was running rampant. And now inflation is still above the Fed's target. But when we get PCE come out later this month, we're looking at somewhere around 2.6% year over year. Still not at the Fed's 2% target, but essentially getting close. And so we're within kind of we're within the distance where the Fed's able to act if there was some sort of economic downturn. They could respond with cutting rates. And I think when you look at what the market's pricing in for the Fed for the rest of this cycle, we're essentially talking about kind of 1.5 cuts. I think that's implying that we're going to have a terminal rate somewhere just south of 4%. Yeah. To us, the world is not that different. Even though inflation, I think, is structurally higher, I don't think the new neutral rate goes from 2.5% to 4%. I think we're looking at somewhere closer to 3%. And there's no telling that the Fed stops at neutral either.
Yeah. Paul, get one more in here.
Andrew, what do you think this Fed is going to do here? I'm looking at my WERP function on the Bloomberg terminal, and it shows maybe 38, 40 basis points of cuts this year. That's it. How do you think the Fed's going to kind of proceed remainder of this year?
Yeah, no, Paul, it's a great question. And I think that it's not just how they respond this year. To me, I have a kind of greater confidence about how they respond over the course of the next kind of year and a half or so. And why is that? Look, I do think that the trend in economic data, while the economy is strong, it's slowly weakening. The labor market is slowly weakening. If you look at the number of job openings, we've gone from the strongest labor market in history in 21 and 22 to essentially the 2019 labor market. We have jobless claims that have been slowly rising. Again, those job openings that we're now about 1 for 1. So I think the Fed's ultimately going to respond with more cuts than the market's pricing in. And I think, again, they're going to, if I look out to the end of 2026, I think we're going to look at a Fed funds rate that's closer to the low 3s than the low 4s. And so I think it pays you to take interest rate risk, but avoid that at the long end of the curve. We don't know where kind of term premium is going to come back into that long end. Scott Bessent was on earlier. I listened to his. It was a great interview. Eventually, the Fed will try, or the Treasury will try to term out that debt, and that's something you have to be worried about. And we do have these runaway deficits. But I think that one of the things the bond market can take comfort in is that DOGE, I think people are starting to take it more serious than they were maybe a few months ago.
Andrew, thank you. Andrew Cesarowski with us with Morgan Stanley there off of the Scott Bessent interview that we saw earlier. Futures at -18 with our news in New York City, John Tucker.
And in that exclusive interview, the Treasury Secretary Scott Bessent tells Bloomberg it was the Biden administration that was to blame for higher prices.
Now that I have the numbers on the inside, there was a big contributor to this massive inflation was regulation.
In the interview you heard right here on Bloomberg Radio, the Treasury Secretary also said trimming out the national debt is a long way off. You can hear the entire interview on the Bloomberg Talks podcast page. President Trump says a fresh trade deal with China possible as he touted his great relationship with Xi Jinping, but didn't provide further details. Trump spoke to reporters on board Air Force One.
It's possible. Well, we did a great trade deal with China. We did it great for the farmers, great for manufacturers. They had to buy $50 billion worth of our product, and we were making them buy it. The problem is that Biden didn't push them to adhere to it.
His comments come just weeks after imposing tariffs on China, and a day after he hinted at new global tariffs on cars, semiconductors, and pharmaceutical imports. President Trump turning further against Ukrainian President Volodymyr Zelensky. The president didn't invite Ukraine to negotiations with Russia on trying to end the war. And he's calling Zelensky now a dictator after the Ukrainian leader accused him of falling for Russian propaganda. Trump discussed the war at the Future Investment Initiative Summit in Miami.
Europe has failed to bring peace, and Zelensky probably wants to keep the gravy train going. I don't know what's the problem, but he hasn't been able. He's very upset that he wasn't invited. He could have come if he wanted to, but that he wasn't invited to Saudi Arabia. But he's been working for 3 years. There's never been even meetings or phone calls to stop this war. It's a horrible thing.
President Trump's turn against Zelensky leaves Ukraine with limited options. And finally, an Egyptian pharaoh's tomb was discovered near the city of Luxor. The finding was actually made in 2022, but only recently identified as the resting place of Thutmose II, the first discovery of its sort since his descendant, Tutankhamun, in 1922. So who knows what riches lie.
I actually read the articles in the British papers, and I actually read the whole article. It's in the middle of nowhere. It's like way south, like almost to Sudan, I'm guessing. It's not like up by Cairo.
And this just scratches the surface of what's under the sand.
I think they almost stumble upon it. They're like out there looking, and then there's a door in the wall, in the cliff.
Maybe a curse of the tomb as well.
But you should have seen. I mean, we had Cleopatra on once.
Back in the day.
Back in the day. John Tucker, thank you so much. Walmart. Yeah. They raised the dividend.
Yeah, nice.
Everything's there, but this is the future, Paul, given this upset we see, politically, whatever your view, folks, the uncertainty's off the chart.
It is. I mean, Lakshman Achathan was just talking about that K-shaped economy. It's been with us for a while, but it just feels like it's more pronounced as we go along.
What does a Pentagon 8% budget cut? I don't know what the math is on that, folks. What's it mean for rents?
Yeah.
In Norfolk, Virginia. Just as a beginning idea.
Big Navy town.
We're going to continue. We got lots of good discussion coming up. From New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, you've got futures falling, the dollar yield slipping, gold hitting a fresh record. We'll start with futures right now. The S&P hit an all-time high yesterday, so let's start there. S&P futures down 0.2%, 17 points, but at 6,145. We go to the Dow, down 0.3%. NASDAQ futures down 0.2%. The 2-year yield, 4.25%, down 1 basis point. The yield on the 10-year, 4.50%. That's down 2 basis points. The Bloomberg Dollar Spot Index down about 0.3%. Minutes showed signs that the Fed is in no rush to cut interest rates. Then we have the Japanese yen, have to point it out, up more than 1%. Hopes the BOJ will raise rates sooner than later. It's now at 149.86 against the dollar. Bitcoin up above 97,000. Some U.S. exposed defense stocks, those are under pressure by U.S. plans to cut military spending. Want to point out BAE Systems down 2% in London, but even AI company Palantir taking a hit. Its major U.S. defense contractor, their shares down more than 3%. To earnings, Alibaba, ADR is up 10%, third quarter revenue beat. Cloud revenue actually grew fastest in 2 years. And just want to point back to Walmart shares. They're down about 8%. After the close, we move on to Rivian. For on-demand news 24 hours a day, subscribe to Bloomberg News now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash.
So Palantir's down, right? Is Dave Ives wearing black today?
I don't know.
Is that what it means?
Who knows what he's wearing?
Maybe he's in mourning or whatever. Okay, we got like 8 ways to go here. I want to go to a serious thing with Kevin Gordon with Schwab. Liz Ann Saunders works for him, and he's with us today. But I got to admit, people are going, where's the bow tie? I hurt my thumb. Vet Bill bit me. And I can't tie my bow tie because of the stitches where Vet Bill bit me. So I'm 2 days in a row. And I'm just trying to keep up with Kevin Gordon.
Social media is blowing up, Tom.
Katie Greifeld and Kevin Gordon, they're out there with the what do you, Lisa, help me here. The turtleneck look, is it something for me?
You're missing out on it, yes.
Only a few people can pull that off, I think.
Kevin Gordon
Jobs, Steve Jobs, Kevin Gordon,
What do
you think? Should you and I be going Suevo?
No, it's not going to happen. No.
What is going to happen is we're going to talk to Kevin Gordon about the tumult in this market. I got to go first to what so many on Wall Street know, that with you at Pepperdine, and you are the LA guy, let's be honest, you should see his Dodger seats.
I know.
This is horrific this far on from this fire, even with mudslides. Give us one anecdote from Pepperdine that was saved about 1 month on, 2 months on, the recovery from this crisis.
Well, you talk about, really a triple whammy for the area. First with the Franklin fire. Fortunately, there weren't any major, mudslides after that one. But then, of course, LA's been experiencing mudslides after this most recent fire. So yeah, you get hit kind of on both ends because you look for the rain for the relief, but then that brings with it some, catastrophic consequences. To your point about Pepperdine being relatively unscathed, the school was built for it, but also there's a water ring around it. There's a lot put in place for it to be a protective structure for students and for people in general in that area. But as we were talking right before the segment started off air, just the devastation outside of that, it's so unfathomable. But I will say and there's been some great stories I've read on the terminal about kind of the rebuilding efforts, the fact that people want to start as soon as possible, whether it's factory-built housing to kind of temporarily house people. Just the scale of it, though, the rebuilding, especially for the Palisades, it's hard to imagine what has to be done.
In your note, and this goes to the conversation with the Secretary of Treasury, is nominal GDP at risk because of all this turmoil?
Because of the turmoil related to
political turmoil, Washington turmoil.
Well, the tough part is if you took a snapshot of the economy now, nominal GDP running at 5% year over year for 2 consecutive quarters.
Wow.
Which is amazing. Unemployment at 4%. And by the way, nominal GDP sort of stabilizing at 5% after the rate of change in that change has come down swiftly. Unemployment at 4%, PCE averaging, upper 2s up to 3%, depending on what metric you pick. The economy as it stands now is in a good spot. It's just what comes after that we have no clarity on, and nobody has clarity on. So you can kind of take your pick from a policy standpoint, whether it's tariff related, whether it's immigration related. I think that more of the risk for the growth of potential of the economy rests on the immigration side, not as much on the tariff side. But this is a big, who knows? Nobody knows, and it changes day to day, evidenced by even some of the news this morning.
Are we seeing that in companies? I'm looking at, we had about 80% of the S&P 500 already report their earnings. Have we seen that in some of their guidance companies saying, we just don't know what's going to happen policy-wise, so we're going to pull back on our guidance, or we're going to just be super conservative?
Yeah.
Are we seeing that?
You're seeing it anecdotally. You're also seeing it now show up in some of the survey data and the business, particularly on the business side. I look at NFIB with a big grain of salt because yes, some of it is maybe biased politically, but if you look at certain things like the uncertainty index, which fell, most recently had its worst month ever, worst month meaning the biggest spike in uncertainty. But even beyond that, to the point about guidance maybe not looking as good, I think one of the reasons that the market has not rewarded stocks even beating on earnings has been because of that guidance component. And the first thing I look at every morning in earnings season is the data from the Bloomberg intelligence team, which is what's the average performance for a company beating on earnings relative to the market. Right now, it's nothing.
Has anybody at Pepperdine ever gone in a Walmart?
Yeah, of course. We're college students. We have to,
Kevin Gordon with us, with Liz Ann Saunders and Charles Schwab. We will continue with Mr. Gordon. We've got claims coming out. They're very claimy. They're very 4% unemployment rate. 219,000, fractionally above the survey. And the revisions on 213, it's a 214 number. Can't say much about it. I don't see much movement on the tape. There's a leading index out for Paul Sweeney at 10 a.m. This morning as well. Our economic indicators, and they get sporting here in the coming days. Economic indicators are always brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small business attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. We thank Commonwealth for their support of all of our economics that we do. You got a paragraph on the dispersion of the Mag 4 or the Mag 7, or maybe it's Mag 9. I don't know. I don't buy the idea they're quiet. Are they quiet? I just don't. It's just a news period.
I think as a group, quiet in the sense that they've kind of been consolidating over the past couple of months as the market's been able to pick up. However,
which Liz Ann Saunders would say is normal, right?
Yeah. Oh, yeah.
Thank you.
I think, yeah, totally normal. But to your point about the dispersion, it's been actually incredible to see, even just year to date. I mean, you look at and I just, I don't cover individual stocks, but we just look at the performance of particularly the Mag 7.
Don't let it be never again.
But, Meta being near the top of the performance board for most of this year. And then Tesla being basically at the bottom. But in addition to that, even some of the really big tech names, whether it's Apple or NVIDIA, really struggling this year as the market's been able to move higher, back-to-back record closes for the S&P this week. So it's I think, a relatively healthy thing that you've seen more of this rotation. And it doesn't have to be a zero-sum game. I think that's what people often get caught up in is if the Mag 7 falls, then the rest of the market has to do well. Vice versa, it's not always the case.
So are we in fact seeing, I guess, a broadening of the market? Because it seems like we haven't had that in 23 and 24. Are we seeing that at all this year, and do we need to see it?
Well, if you're going to use the equal-weighted S&P as your gauge for that, not as strong because it's still not back to its prior high made at the end of last year. But I will say that some of the strength from other sectors that were taking a while to really get up and going in the beginning days of this bull market, financials has really been the standout there. So I think that has been a really interesting story. In addition to the fact that utilities has also done quite well, typically thought of as a traditional defensive sector, but maybe there's other elements at play in terms of a longer-term secular, AI play, if you want to think about it that way.
Quickly here, what's the mood of retail? I'm getting AI, whatever studies that there's a little bit of angst out there. Does Schwab see retail angst?
A little bit of angst. It's not yet reflected, though, on the behavioral side of things. So I was just speaking to a bunch of clients last week on the road, and for the first time in the past year, especially when all the election discussions have come up in the Q&A sessions, for the first time ever, at least in an event that I've done, the questions were not dominated by tariff talk. It was all dominated by immigration policy. And a lot of the angst just associated with what's going to happen from a growth standpoint for the economy if you go to the extreme end of what's been proposed for immigration. So there's an interesting shift. I'm not sure that it's reflective of anything right now, but the mood shift towards that has led to more angst.
I got 30 seconds. When you're on the road, is that like the Chelsea, or is it the Sutton Place, or like some shishi restaurant I can't afford in Soho?
It could be.
Do you get off the island when you go on the road?
I mean, last week I was upstate in Albany, and then I'm going to Los Angeles and Santa Barbara and San Francisco next week. So it's a very you get the real cold, you get the heat, you get everything in between.
And folks, what you don't know, Sweeney lived this for umpteen years. It's so romantic, Paul, isn't it? You're an SFO, and you're like, how long is the plane delay?
Doing the red eye,
5 million miles on United.
Did you do 5 million miles? That's on the edge of Illyria.
That's how you get II votes. You got to go out and get them.
Mohammed's so large in United, he sits with the pilots.
Exactly.
Kevin Gordon, Liz Ann Saunders is the one that sits with the pilots. Kevin Gordon, thank you so much.
Thank you.
With Charles Schwab. Futures negative 19. We're watching Wal-Mart. Lisa will give you news on that. It's Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling, and this is after another record close for the S&P 500. After more economic data, too, we had initial jobless claims come in as well. We'll go to NASDAQ futures down 0.2%, 57 points. Dow futures down 0.3%. S&P futures down 0.3%. We have the two-year yield 4.26%, down 1 basis point. The yield on the 10-year 4.51%, and that's down 2 basis points. We have the Bloomberg Dollar Spot Index down 0.3%. Bitcoin reaching above 1% at 97,000. Shares of Mercedes, want to point it out, their stock is down 1% in Germany. It warned of a sharp drop in earnings, as well as plans to cut production costs by 10%. Wow. Then we go to Renault, shares slipping down 3%. Renault, thank you. As it forecasts operating margin of at least 7% in 2025. You compare that with 7.6% last year. And finally, Tesla. They are set to make their long-awaited entry into India. Sources saying the company's going to be shipping a few thousand cars to a port near Mumbai in the coming months. And Wal-Mart shares still down this morning. Down right now, 6%. That is your Bloomberg Business Flash. Paul and Tom.
Are we seeing a trend here, Paul? I'm seeing like companies coming out going, yeah, but.
Yeah, the auto business, Tom, right. I don't know how one invests in the auto business today. You don't know where you are in this evolution to electric vehicles. How much money do you invest? Do you pull back from it? I think it'd be almost impossible to manage an auto company.
I was, the Bentley was in the garage, so I was in a car, an EV, like a real car, not a Tesla, like a Cadillac or something. And the guy said charging is still a massive headache, massive headache.
And I don't know where the demand is, the consumer demand. I really don't.
Here's the way we roll, folks. Yesterday, I believe it was, we had Henrietta Trazen. She's fabulous at Veda Partners. You got Capitol Hill, and it's really nice. You got talking heads and all that, but actually people that actually know the cadence and know the pace. With the single best research note I've seen of this moment, Libby Cantrill is at PIMCO. Get her research note. Is it at the website? Visible?
You can sign up for the website, yes. At the website, yes.
Okay,
it's at the website. But,
and
friends.
It's titled, I love this. I mean, this is the cynicism of Cantrill. But. Everybody's going, but. Mm-hmm. Define the but on Capitol Hill right now between Republicans and Democrats.
Between Republicans and Democrats, I mean, even between Hill Republicans and the administration. I mean, I think a lot of what the administration is doing, showing that there's a lot of bias towards action. But at the end of the day, much of what they're talking about really does fall within the remit of Congress. This is where you're not seeing a lot of Republicans necessarily push back on the president. But as you know, Article 1 of the Constitution, pretty clear about who has the power of the purse. And ultimately, to really achieve significant savings, for instance, you'll need Congress. And so this is where the but comes in terms of the flurry of executive actions we've seen, and actually to move the market. You're going to need Congress.
Do you have a faith? We talked to Wendy Schiller. It's a college up in Providence, Brown University.
I know her well, yes.
You may be familiar with her. Libby Cantrill, I mean, where are the checks and balances? You're expert at the legislative process. Do the committees hold forth? Is it leadership? Who's going to do the but?
Well, Tom, I think, and this is where we're just waiting. I think it is a question of when and not if the Congress starts asserting themselves. But Republicans, understandably, are trying to give the president a wide berth. He has a very high approval rating, at least relative to them. And so I think they're trying to sort of give him the flexibility to do what he can. But again, we're on a collision course with either Congress or the Supreme Court, because at the end of the day, there are both the Constitution and then a law called the Impoundment and Control Act that limits what the president can do in terms of rescinding or holding back money that's already been appropriated by Congress. This is going to make everybody's eyes glaze over, but when you're actually really talking about DOGE's cost savings, at the end of the day, there are going to be limits to that. And again, I think this will probably be litigated in the courts. And I think the broader macro picture for investors from a deficit perspective is really to get, again, these real cost reductions. That all has to go through Congress. And that's why the tax bill, the reconciliation bill that we're seeing headlines is going to be really quite
so that's
important.
kind of where I want to, Libby, I'm just imagining, if I were a portfolio manager at PIMCO, I think I'd be calling you and emailing you like 5 or 6 times a day. Do I pay attention to this? Do I pay attention to that? What are you telling your PMs to really focus on in terms of the news flow that's coming out of Washington?
I mean, there's honestly so much noise, and I do think it's been challenging for everyday Americans, but also for investors to really pay attention to the signals. I think, what we're obviously, bond investors, debt investors. So what's going to move the bond market is going to be either fiscal stimulus. It is going to be these cost reductions. Again, that's really in the purview of Congress. In terms of the things that move markets as it relates to executive authority, I mean, tariffs. The president has a lot of, as we know, and as I think has been demonstrated, he has a lot of unbridled authorities around tariffs, and then also moves for deregulation. So there are absolutely things that the president can do that, are really going to be impactful for markets. But on the fiscal side, that really does rest with Congress, and this is where the but comes from. Like a lot of noise, but again, kind of pay attention to the signal, and the signal really on fiscal policy is through Congress.
One of the first issues that President Trump took up was just immigration policy writ large here. And a lot of people are saying that could have some serious economic impacts as it relates to the labor force, as to economic growth, that perhaps some of the migrants from the last 4, 5, 6 years have in fact gone into the workforce, are contributing, are paying taxes, and that could be an economic headwind. How do you guys frame that?
And I was remiss not to say, because he does actually have a lot of unilateral authorities around immigration too. I mean, it's interesting because we were already penciling in somewhat of a headwind to growth just from President Biden's policies on immigration back to June of 2024, when President Biden, I think, acknowledged this was a political issue, so he started doing things to really slow the migration. Right. So we were already penciling in some slowdown, but to your point, particularly if you get, and again, these sort of mass deportations or what have you are, I think, going to have to go through Congress and get some funding for it. But it could be a headwind. And this is where I think that the administration may not want to reconcile. I mean, some of the stuff that they're going to do could actually slow growth. Tariffs and immigration could actually be headwinds to growth.
I want to get this in quickly here. I think it's too important. I've been picking on the Senate Armed Services Committee, particularly with what's going on in Europe. Mr. Putin, I got 3 members in each party: Fisher of Nevada, Cotton of Arkansas, Rounds of South Dakota. He's been very supportive of the show. Shaheen of New Hampshire, Gillibrand, New York, and Blumenthal of Connecticut. What are the powers of the committees now after the complete zoo we've had for 10 years, 15 years? Do the committees have power like, say, House Ways and Means had 30, 40 years ago?
On foreign policy issues?
Not so much foreign policy, but on Libby Cantrill issues. Does the legislative branch have the ability to legislate anymore? I think is what our listeners want to know.
And I think it's such a great question, Tom, because what
it's
we have seen...
my only good one of the day. Go with it.
What we have seen is the presidents of Republicans and Democratic presidents have taken executive authority, and they keep pushing the boundaries. We saw this under George W. Bush, and then under Obama.
Trump's defense, this is not new.
It is not new, and honestly, this has just been an evolution of something that really started at the turn of the century. And I think what happened then, you just saw Congress sort of slowly cede its authorities as you had very tight, a tight divided Congress. I think this is also the issue, is that no real party has had a significant majority. I mean, there's been Obama in the first year, what have you, but really in terms of either a filibuster-proof majority or a large majority in the House, it just hasn't happened. And so I think as a result, the executive branch has gotten, frustrated with Congress, and they have moved forward.
Paul and I were talking about you before you came in. Libby Cantrill's going to be with this. I saw a chart that showed Kansas City and everybody else in America rooting for the Eagles. You lead the committee of Hate the Chiefs. What was it like to see the Eagles win?
It was, and just to be clear, I'm not necessarily an Eagles fan, but I am a very staunch Denver Broncos fan. And Denver Broncos, we've never liked the Chiefs. You know, it's like we've never liked the Raiders. We've always been Raiders haters, and we've always disliked the Chiefs.
Did you get past the third mimosa during the Super Bowl?
It was fantastic, I have to say. It was just total vindication. We were all wearing green, so it was, and a little bit of orange, just for the head nod to the Broncos. But it was a great day.
That's good. Libby, thank you so much. Don't
Thanks
be a stranger. Please come in more often. It's time. Hey, we're really trying, folks, to give you a balance. Thank you. Charles sent in a wonderful note saying thank you to get the secretary on as we did this morning. Thank you to Anne Marie Horton for that. But we're really trying to give you a conversational balance in the turmoil that we see in the nation's political economics right now. Futures at -18. Dow futures -148. The VIX 15.60. I haven't even mentioned a dollar today. Dollar weak. Yen, new strength. 150 on yen. That's a big deal. We'll try to get to that as we can. Paul Sweeney and Tom Keene. In New York City, it's Bloomberg's Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul, do you see what it's like here? Menton walks in the studio and her entourage puts maroon M&Ms next to her chair.
Exactly, I know. It's in her contract.
The fighting Texas Aggie, she's got to have maroon M&Ms or she can't get through the morning. Jess Menton joining us now in the equity markets. Okay, I'm lost. I flunked this on the CFA exam years ago. I still to this day don't know consumer discretionary, consumer non-discretionary staples. For example, Good Morning, New Jersey, Church & Dwight, Arm & Hammer deodorizing dog shampoo for smelly dogs like vet bill and kennel fee. Is that a staple?
I mean, yes, according to some people it is. And it gets a little confusing here.
It's a little confusing.
It does, because retailers aren't all housed in one particular sector. So, for instance, you have Wal-Mart that's technically in the staples category because it is the world's largest grocer. But then also you had Target that moved over to staples 2 years ago because its percentage of groceries started moving as well. So you have both of those housed in staples. But then if you think about other companies like Starbucks, housed in discretionary.
Church and Dwight, you mentioned
seriously, Starbucks is discretionary.
Correct.
Discretionary for a lot of people. It's not. Church and Dwight, symbol CHD, 20. It's based in Ewing, New Jersey. I was based in Ewing, New Jersey for the first 20 years of my life. I had no idea it was there. I didn't think anything was in Ewing, New Jersey. All right, talk to us about just how we should think about this market here, Jess. Is it broadening out? Is it healthy? I mean, we're a little bit soft here today on the futures, but we've been hitting all-time highs almost every day this year.
And even beyond, when you're looking at the major indexes, beyond the S&P 500, which touched its third closing record yesterday, and the NASDAQ 100 hitting that record as well. But then you have the equal weight NASDAQ 100 trading at records as well, so it tells you even beyond the Mag 7 stocks. But I like to look at the telltale sign. I sent you all this chart about the ratio of equal weight discretionary versus staples. So you've seen that steadily climb, not even just this year, but since the lows that we would have seen in the bear market
Right.
of 2022. So that really tells you, and specifically I'm saying equal weight because it gets the noise of Tesla as well as Amazon out of the way in the discretionary side. So it's been climbing higher. So even though you have companies like Walmart, obviously this morning cutting that outlook, it still tells you that Wall Street was still viewing brighter times ahead here.
Is Walmart seriously, is Walmart a Mag 7?
Well, look how much it's been up the last year. It's up 77%
Exactly.
through yesterday's close. So
Paul
you could
nailed
argue
it.
that
Lisa,
it's been trading.
Lisa, her entire house's foundation is built on Costco's moonshot.
And even if you look at the SPXT, I mean, that's up around a quarter of its value in the last year alone. So you could argue that the way Walmart was trading, even with today's set for this decline that we're going to see here, it's still been quite a run and quite a tear for that retailer.
All right, you sent me a chart. I have no idea what it's about,
There we
but it
go.
has to do with the VIX.
Yes.
And so in honor of Tom Keene, I'm going to ask you about what's happening.
This is
Volatility.
the CFTC data, so it gets updated every Friday at 3:30. The reason it's important, I'm looking at hedge fund positioning and large speculators. And so right now they're wagering on lower vols. So the shorter bets are at levels seen in last July. And the reason I pointed out that was during the time period where we had that Federal Reserve meeting on July 31st. And that's when Powell was signaling that to expect rate cuts were coming. Obviously, we also had the Bank of Japan had a counter decision that week too that ended up fueling that yen carry trade that was unwinding there. But that tells you that big speculators are positioning for a lower vol, but if you're caught on the wrong side of that, you could see that move pretty sharply there. So it's been 16 weeks in a row that you're seeing shorter volatility bets.
What does that mean?
since
Does that
July.
mean they're bullish or they're
That
scared?
actually means they just don't expect volatility to pick up. The downside of that is if you do see a sharp jump in volatility, they'll be wrong way positioned and have to dramatically change. But that's something that right now you don't think hedge funds are basically positioning for volatility to stay lower.
Is everybody in your aisle at Bloomberg medicated? I mean, to get
I
through
don't know what
a
they're doing. I
morning
have
with
no idea
Jess
what they're
Benton
They follow the markets every single
every day,
all around the
7
world.
days a week.
We love this stuff.
It's like Reagan 101.
Yes.
Yeah, he's the
Reagan's great.
worst.
We have no.
He used to be my editor.
Lisa, when you're on, I'm not exhausted. I feel all peace, love, and dope. When Menton's on, I'm falling apart. Hockey game, Boston tonight. We played Canada yesterday. Alanis Morissette, John Cougar, Mellencamp.
Voices from nowhere and voices from the larger town. Filled our head full of dreams and turned our world upside down. There was Frankie Lyman, Bobby Fuller, Mitch Ryder. They were rocking. Jackie Wilson, Shangri-La's Young Rascal. They were rocking. Spotlight on Martha Reeves. Let's don't forget James Brown. Rocking in the USA.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo. Barr gone. Is he gone the whole week? Like, you came back on a Friday.
No, it's a big cruise. I mean, who knows where he's going down in the cruise?
It's not like Tampa to St. Petersburg. It's like a real cruise, like, three-island tour. And all
exactly
that.
right. He's on the SS
Very,
Reno. He'll be fine.
and I asked him, I said, what kind of, room do you have, cabin or whatever they call it? And he can see both sides of the boat.
Sure.
It's so immense.
He's a player.
See the port side, the starboard side, and it's pretty cool. Michael Barr, I was scheduled to be with us Monday. We'll see on that as we can. We say good morning. What an interesting day. A conversation, heated conversation at the time with the Secretary of Treasury. Really good analysis of everything going on in Washington.
As John Farrow walks by the studio.
Yeah.
He did his duty. He's done.
Yeah, he killed it. John asked some very pointed questions to the Secretary of Treasury. The smartest thing I heard, we mentioned this before, he said, wait, I've been doing this for 3 or 4 weeks.
Exactly.
The news flow right now, and major shout out to John Tucker, Michael Barr, and others leading with our new, not Lisa, but leading with our with our news flow. It's there's a funnel here I've never seen.
Well, thank goodness we have the Bloomberg terminal. That's all I can say, because they just kind of serve it up.
It
for
aggregates.
us. It aggregates.
We got a story we're going to cover here from the Washington Post. We'll try to get to that in the hour. We say good morning. We got a really, really important, lengthy conversation coming up with David Sowerby of Ancora. He's in Michigan. He's away from 3 zip codes in Manhattan with an important equity perspective. Futures negative 16. Wal-Mart. Wait, I got it memorized. Mike, help me out here. WMT equity.
Go.
BQ.
Yes, that's the way you roll.
The Sweeney's, the lessons with Paul, they call this. And it's an improvement. Come on, we're down 4.9%.
Okay.
Down 8% earlier.
Right.
Coming back.
But stock's up 77% over the trailing 12 months, getting you to that
look
sporty
at that.
40 multiple there.
1 year delta percent.
Yes,
is that what that is?
That is 1 year return.
Lisa,
it's got everything.
He's
there.
a font of wisdom.
If you're a trader, it's got, you see where the bid and the ask is and who's got the bid.
Are you done with your gluten-free breakfast? Can we go to you?
Yes, I am.
From the Interactive Broker Studios of Bloomberg Business Flash, well-fed, Lisa Mateo.
Most definitely. All right, we've got stocks set for a modest retreat from a record. A disappointing forecast from Wal-Mart did not help. Those shares right now, they're down about 4.5%. We'll start with NASDAQ futures, down 0.1%, 38 points. Dow futures down 0.3%. We have S&P futures down 0.2%. We have the 2-year yield, 4.27%. That's little change, and the yield on the 10-year 4.52%. That's down 1 basis point. More economic data. Report on jobless claims that showed unemployment applications were a little changed last week, hinting toward the solid demand for workers. If you want the exact numbers, initial claims increased by 5,000 to 219,000. The Bloomberg Dollar Spot Index down about 0.3%. Have to point out Japanese yen up nearly 1% at 150.14 against the dollar. Few stocks on the move. Shares of video game platform Vimeo, used car retailer Carvana. They're both slumping after disappointing earnings. We have Vimeo down 14%, Carvana down 5%, and Alibaba, the ADR is up 9%. Third quarter revenue beat, and what that's doing, it's giving its Chinese e-commerce peers a lift. So you have JD.com, ADR is up 4.5%, and PDD Holdings up 3%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. And this is a treat. We really try to stake out a good amount of time here with David Sowerby. He has a really interesting history working with the city of Detroit, among others, the iconic Loomis sales years ago, and now with Ancora, looking at not only industrial America, it's like Canadian National. They got the train across Canada, and they go.
I've been on that train.
North-south, north-south down the Mississippi River, but just a twisted and different look with a tilt to mid-cap and small cap. David, can you explain to me how Walmart makes 5, 6, 7 cents in the dollar and they're trading at a 40 multiple? Please, is that in the Wayne State textbook?
No, it's not an evaluation textbook, Tom. And in a way, it's reminiscent of what we saw in Walmart in the late 90s, early 2000s, when its valuation got very stretched to the retail group. And then it went through an extended period of underperformance. So we'll see what happens out of this number today.
Does this end ugly? I mean, what all our listeners want to know from David Sowerby is, okay, we're all fat and happy in our 501ks. David Sowerby, does this end ugly?
No, it doesn't at all. Companies are still generating above average free cash flow margins. Fourth quarter earnings report, I'd give them a solid B plus for earnings, cash flow, and revenue growth. This year is the metric you and I like to talk about, Tom. Free cash flow for the S&P 500 will grow close to 15%. That's not a backdrop where it ends ugly. It just simply means some tempered expectations, but still bet on the ability of U.S. companies to generate shareholder value.
David, as we think about 2025, and you look back to 23, 24, where you had north of 20% growth in the S&P 500 or gains in the S&P 500. We think about 2025, what can drive this market higher? Because it doesn't seem like the Fed is going to do a whole lot for us. So do we really, really have to focus on earnings?
You do. Valuations will have a difficult, if not impossible, ability to increase higher valuations. So now it comes down to earnings, dividend growth, and free cash growth. That will be the driving force. And then the other I like that this market is broadening out. We can all pick our favorite date. I'm going to go back to July 11th of last year when the market started to broaden out, and it's been a little bit of 2 steps forward, 1 step back. But small caps have outperformed large caps by about 3 percentage points in that 7-month time period. And then when you find the alpha producer within smaller mid cap, the ability of good managers to outperform, you've seen returns that have doubled the S&P 500 for good small cap managers versus the S&P index.
July 11 of last year. Sowerby has no clue. I mean, Red Sox 7, Oakland A's 0. The Red Sox were 10 games above 500. What happened?
And the Tigers made the playoffs.
Exactly. There you are. Thank you.
Hey, David, what screens well for you guys these days? Is it the big growth stocks that have been the darlings over the last few years? Is it some value names? Is it different market capitalization? What screens well for you guys these days?
On that often asked Mag 7, I don't think it's a binary event, all or none. So I think, but on the margin, those weights have to come down. While their free cash flow margins are still quite impressive, their valuation is priced for perfection, if not sainthood. So I think you want to be trimming them, and you want to be moving your portfolio, not just talking my book to small mid cap, but also to the value side. And that's where I think there's still opportunity, recognizing we're in this 7-month inflection point rotation that's still ongoing.
On YouTube, across the nation, on your commute as well. David Sowerby with us, with a great sense of the Midwest. He meant Michael Barr's not here, so I'm glad somebody mentioned the Detroit Tigers. No one else cares. But David Sowerby with us here, and thank you for subscribing to YouTube as well. I'm going to steal that line. The market's priced to sainthood.
I like that.
That's
that is
it's just like it's like
that
you know. It sounds like it could
some
be
of the Mag
Barron's.
7 are.
Hey, so David, talk to me about a name that I'm not sure even Tom and I have not spoken about. I'm not sure when. Weyerhaeuser. We're talking lumber here. Talk to us about that name.
So 3% dividend yield. Lumber prices are up 15% since December. That's giving them a tailwind. You don't own it just because maybe tariffs will be beneficial to U.S. lumber and timber, but that's an indirect benefit. They're going to double their free cash in 2025. So for a stock that's been sitting around $30 a share for too long, now there's this, I think, more macro backdrop with a company that's very well run. And think about it. Trees are an asset that grow. Unlike other assets that don't have Mother Nature on their side, that can be a beneficiary to a lumber timber company like Weyerhaeuser out in Washington, USA.
Yeah, it's just a name you don't think about at all. Another one that
my job is my job is not to bring you Microsoft, but bring you something a little.
I love it. I love it. I mean, yeah, again, based out in Seattle, you think about this. Atlanta Braves. This is a name near and dear to my heart because I basically been followed John Malone since the earliest days of his cable career, and he's been such a phenomenal allocator of capital. And wherever John Malone goes, I tend to follow. A lot of smart money tends to follow, I think. Talk to us about the Atlanta Braves. That's a publicly traded company.
It is. And John Malone has recently bought 24,500 shares. So if you follow the money and you believe in John Malone, as Tom knows, he's one of the chapters in Thorndike's Outsiders book. So plus you have the franchise, the stadium, broadcast rights. They own some mixed-use retail around the stadium. They were one of the first teams back in the Dale Murphy Atlanta Braves days to go on national TV with TBS. So when and then you look at sports valuations going higher and higher, billionaires buying sports franchises. There's the backdrop to the Atlanta Braves, and only 4 analysts follow it. That's right in a wheelhouse for an underfollowed stock.
Okay, does a sports franchise, the New York Giants public?
No,
that was a joke. Good morning to the Tisch family. Thank you for your support. David Sowerby, as simple as I can, does something like the Atlanta Braves trade on how the baseball team does? Like if they win 7 in a row, does the stock go up?
if they're destined for the playoffs, and then you get the extra playoff money, that moves the needle. And the Braves in the last several years have been better than not, and that's helped the valuation on the stock.
Right. You and I lived this, and I think Paul did tangentially, which is bolt-ons. And the basic idea that a company like in specialty chemicals out in the Midwest would say, okay, we're going to jettison this hunk of our company. And there'd be people out there that would see this smaller company that was jettisoned, and maybe they would bolt it on. Are we going to get a lot of M&A action around industrial companies, right-sizing, downsizing, and aggregating?
It's already taking place in more small cap value. You're seeing more and more buyouts. We're seeing more and more buyouts in our successful small and mid cap strategies. It's reminiscent of 2000, 2001 when valuations were more attractive, and as companies want to grow, you're going to see more buyout M&A in that sector.
Give us another name right now. Come on, just like this is like Gerard Cassidy and Banks up in Portland. David Sowerby, give us a small cap name. You say shut up and buy it.
Lakeland Industries, symbol LAKE, Huntsville, Alabama. Only 2 analysts follow this company. What do? That's great. They do fire, apparel, and equipment. So you're seeing fire departments up their budgets, sadly, out of the tragedy in Southern California. So here's a play on that for apparel and equipment in the safety and fire space, Lakeland Industries.
It made 12% over the last 10 years, had a huge moonshot up to a couple of years ago, came down, it's bounced back nicely. I can go to the BQ screen because Paul Sweeney taught me how to do this. I mean, I look at 1,800, this is like a Calvacina stock, 1,800 employees. Ready? It's trading at 1 times sales. 1.2 times sales. How does it get discovered if only 2 people on the sell side buy it? So I buy it, but do I own it forever, David Sowerby?
Perhaps not, but you can own it at least a year.
It's up 45%
in the last year.
How it gets discovered is the formula. They've got a good story. They get out on the road. They tell their story. They go to more investment conferences. Sell-side analysts are a little bit like sheep. When the stock starts moving up, here they come to pick up coverage on it. That's how a company with 2 analysts turns into a company with 5 analysts following it because they're delivering on capital allocation and cash flow shareholder value.
Michael Darda's shop, Roth Capital, they follow.
Well, I look at who the investors
Roth is
are.
very good on small caps. They're one of the few that are very good.
And, in addition to Ancora Advisors, Wasatch Advisors out in Utah.
How do you pronounce that? I've never known
Wasatch.
how to Wasatch.
They're out in Salt Lake. They own 1 million shares. So, David, how do you guys find these things? How do you screen for a company like Lakeland Industries?
There's really 2 formulas here. One is with some degree of certainty what stocks are likely to be going into the Russell 2000 on a June rebalancing. You want to turn over those stones and find them the right companies before they go in. That's the formula. The second formula is you buy the spin-outs. Small company spins out of a larger company. Since that July 11th inflection point, the Bloomberg spin-off index is up more than 40%. Those are the 2 formulas, spin-offs and underfollowed stocks that are going into the index, buy them before.
David, can we do this every 6 weeks?
Absolutely.
We get a huge response. David Sowerby, thank you so much. Folks, for the rest of the week, all we're going to talk about is Amazon, Meta, and Apple. We got our dose of Mr. Sowerby. David Sowerby, thank you so much. Futures -14 with our news in New York. John Tucker.
Well, let's start with this, a promise to bring down the rate of inflation. That from the Treasury Secretary, Scott Bessent, in an interview with Bloomberg this morning.
Everything that President Trump's administration is doing will be disinflationary. We're going to bring down energy costs. We're going to bring down regulation.
Bessent said that any move to boost the share of longer-term treasuries in government debt issuance is also some ways off, given current hurdles that include the Fed's quantitative tightening program. Longer-dated treasuries rose in price after his comments. You can hear the entire interview on the Bloomberg Talks podcast page. That rift between the U.S. and Ukraine has grown wider. President Trump, speaking on Air Force One on his way from Miami, discussed aid funding that has been sent to Ukraine.
It's also time to find out what happened with all the money, because he made the statement that half of it he doesn't know where it is or something like that. And I'd like to find out all the money that we've been sending to Ukraine, where is it?
Trump yesterday embraced the Kremlin narrative and its unprovoked war with Ukraine, denouncing President Zelensky of Ukraine as a dictator. Trump warned in a social media post the Ukrainian leader had better move fast to reach a deal with Russia, or he is not going to have a country left. Hamas today released the bodies of 4 Israeli hostages, said to include a mother and her 2 children who have long been feared dead and had come to embody the nation's agony following the October 7th, 2023 attack. The remains were assumed to be that of Shuri Bibas and her 2 children, as well as Oda Lipschitz, who was 83 when he was abducted. The Senate set to vote today on confirming Kash Patel as FBI director, a decision that could place him atop the nation's premier federal law enforcement agency, despite concerns from Democrats over his qualifications and the prospect that he would do President Trump's bidding. Patel cleared the Senate Judiciary Committee last week by a 12-10 party line vote. He is set for consideration by the Republican-controlled Senate sometime this afternoon. And Dunkin' will no longer charge extra for non-dairy milk, meaning the option is now free at the 5 largest U.S. coffee chains. The chain goes into effect March 5th. Based on feedback from customers like Lisa, coffee chains have faced pressure from advocacy groups such as the Center for Responsible Food Business. They argue that markups are unfair to customers with health or dietary restrictions.
So no charge up for oat milk?
No charge for oat milk at Dunkin'.
Are you kidding?
Look how excited she is now.
Milk. Milk comes from a cow. I don't know what you're
Oat
talking
milk.
Oat milk.
Yeah.
That's not,
How about
that's oat
which is
juice.
better?
That's not milk.
We're going to rip up the. Are you done? We're going to rip up the script here. Lisa, oat milk or almond milk? Which is more healthy for me?
I don't know which is more healthy, but I like the almond milk because it has a little bit more protein. So
sure.
I always get that extra.
Okay, Danielle Abril, Nathan Hager. You know, I was in Washington years ago, and I said to Nathan, "Where can I get a beverage of my choice?" And he says, "Go to Ebbett Grill, but don't go where the tourists are."
Okay.
And in the back room off to the left, there's like pheasants and ducks, Republicans and Democrats hiding. That's where Nathan Hager hangs out. Like, you know, he's there like 4 nights a week. Danielle Abril writes it up in the Washington Post. In-office work, highest level since 2020.
Nice.
Companies pull back on the remote. Even in Washington, they're seeing. San Francisco's a little better.
Boy, that looks like a good spot.
You know
there,
who's never worked from home ever during the pandemic?
I would suggest Jay Tucker.
Inclusive. Just guess.
John Tucker.
I don't
Rich
know what
Truman.
It's like.
You guys came in every.
Rich was here. Ken Felly was here, and I used to order lunch and go down and get it for us guys. And
Good morning, 99.1.
Tight, cozy little group here.
It's ridership shit up. We turn to Paul Sweeney. You don't take the train, John, do you?
No, unfortunately, I have to.
Train doesn't run.
I have to take the most expensive method to get into work.
Exactly.
Paul Sweeney, help me with the train. Is it getting busier?
Yes.
Joe Weisenthal says it is.
Yes, absolutely. I think it does.
And please don't miss the Bloomberg exclusive on NJ Transit, where we track the number of rats on. How does a rat get on a New Jersey Transit bus?
We turn to our New Jersey. Have you ever seen a rat?
No, I have not. I've seen it on the subway.
I've seen it on the subway.
Yes.
So I'm in Paris, and there's a rat. Like at night, we're coming out of some fancy place. There's a rat the size of a damn. It's the size of vet bill. What can I say? Thank you, Danielle Abril, Washington Post, on return to office from New York. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the year-over-year change in U.S. PPI exceed 3% in February 2025? At IBKR forecast trader, the yes, recently at 39%. What's your take? You can trade your prediction at ibkr.com/forecast. All right, let's start with NASDAQ futures. Down 0.1%, 38 points. We have Dow futures down 0.3%, and S&P futures down 0.2%. We have the 2-year yield, 4.27%. Little change. The yield on the 10-year, 4.52%. That's down 1 basis point. To commodities, have to point out gold, COMEX gold, $2,941 an ounce. Over to oil, Brent crude, $76 a barrel. WTI crude, $72 a barrel. The Bloomberg Dollar Spot Index down about 0.3%. Some U.S. exposed defense stocks, they're really under pressure. This is by U.S. The planning to cut military spending by talks of that. BAE Systems, it's down 3% in London. Even AI company Palantir taking a hit, down more than 2%. Sorry, Dan Ives, because it's a major U.S. defense contractor. That's the reason. To earnings we go. We'll check in with Wal-Mart again. Their shares down 4%. Shares of Wayfair, they were down. They're now up 6%. Fourth quarter results seen as kind of mixed. And from retail, the fast food will end with Shake Shack, lifting 13%, reporting strong financial results for Q4 and also fiscal year 2024. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Got to get the market open here. We're going to do that here in a number of minutes. But surrounding us right now, let's go to Analog. But first, surveillance correction. I had Nathan Hager at Ebbett's Grill, and have I been corrected?
Really?
Morris American Bar.
Oh, okay.
Fancy craft cocktails and, like a daiquiri that was mixed and hibernated for like 6 hours. And, the ice cubes come directly from, some river in
that looks
northern
good too.
West Virginia.
I'm Googling that right now.
Excuse me, I misspoke there. Nathan
That's a
Hager.
sleek looking place.
Thank you. Well, Nathan's a sleek kind of guy. Anna Wong with us now of Bloomberg Economics. We could literally do like an open question. Anna, what are you focused on? Why don't we do that, folks, given the madness here of our economy and our political system, whatever your views? Dr. Wong, what are you and your team looking at, the granularity of what you're looking at of this American political economy?
Yeah, Tom, I think the most important issue right now is fiscal and what DOGE is doing and what potentially they could do. So if we look back at the frequency of tweets of President Trump back in his first term, in fact, the tweets about taxes and fiscal is 3 times as many as his tweets on tariffs and trade. And so even as tariffs certainly dominate news headline, we have to understand that the U.S. economy is still, after all, a rather closed economy compared to the other countries. But the fiscal part is going to have, well, the issues we must be thinking about is the potential cuts of DOGE. Right now, it looks like the tally on federal job cuts is about 100,000 to 200,000. It's actually quite unclear what it is. And it could be moving the dial on the unemployment rate by, we think, 0.2 percentage point in the next 9 months. And then the second part are all these contracts and grants freezes from DOGE. And apparently the number of contracts worker from federal government is 3 times as many as the direct employee of federal government. And, on average, private sector contractors earn 25% more than federal workers. So if we're thinking about how retail and consumption and the economy is supported by these more well-off people, I think the focus is really should be about the contractors layoff, which are, I think, from what I hear anecdotally, but hasn't shown up in data yet, is the contractors layoff.
Brilliant. Absolutely brilliant to hear that from her. Get one more in here before the market opens.
So, you're down in Washington, Anna. What's the feeling like in the district about these layoffs here? What's the level of anxiety?
The feeling is kind of like, so when I started at University of Chicago, which has the bad reputation of 30 years ago of getting rid of a student every, one out of 3 students. When you look right, look left to you in Washington, D.C., one of the person on your side is laid off. That's how frequently this mention of anxiety of being laid off. Everybody knows somebody who's being laid off right now in the DC. I have to say, I've not seen this kind of anxiety in my decades of living here.
Can you adjust real G? Well, I got to do this. I got to get this is, we could talk to Dr. Wong for like, 4 hours?
Yep.
Ruin her lunch. Anna Wong, stay with us. Don't go away. We're going to come back. I've got an important question there on what's folding that into the animal spirit and the GDP of the country. Futures are -18. They're now -14 here in the market. Open. The VIX, maybe the VIX isn't open today. Over in Chicago, 15.52. After a gluten-free breakfast, Lisa Mateo with the market. Lisa.
Yeah, and I want to start with the S&P 500 because it's coming off another record high. So right now we'll go there. It's down 0.2%, 14 points, but it's 61,030. The Dow down 0.3%, 175 points, 44,450. The Nasdaq just kicking in this morning, down about 0.1%, 23 points at 20,034. We go to the 2-year yield, 4.26%. Little change. The yield on the 10-year, 4.51%. That's down 2 basis points. Have to point out COMEX gold, $2,946 an ounce. We go to the Bloomberg dollar spot index, down about 0.4%. Want to check in with shares of Wal-Mart at the open, down 4%. And leading the Mag 7 this morning, that would be Apple, up about 0.4. Oh, and actually, no, it's NVIDIA, up about 0.9%. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thank you so much. It's way harder, folks. What Karen Moscow and Lisa do, you laugh, you go, ha, ha, ha. It's way harder than it looks to sit there with a Bloomberg terminal as things are actually opening. With Anna Wong, we wait 30 seconds before we get an interpretation here. How do you interpret our real GDP right now? With our political ambiguities, Dr. Wong, do you have to mark down Q2, Q3, Q4 real GDP?
Well, first, we will have to think about Q1 first, Tom. So Q1 in January, we had a very weak month across all economic data because of weather. And it looks like in February, we have another weather-stricken month. So you have 2 out of 3 months in the first quarter, which are very much economic activity probably slowed because of weather. So in first quarter, we're probably looking at real GDP in the vicinity of more like 1.5%. But in the second quarter, then you might, and on top of that, we're talking about a potential government shutdown in March. So in the second quarter, what you'll see is a rebound from the weather decline, which is temporary in the first quarter. But a big unknown is the government shutdown, whether it will extend into April, and the length of this government shutdown. And I think there are some, there are some theories that suggest that maybe this shutdown will be a very prolonged one because it actually fits into the, goal of the DOGE, which is to freeze government activity for a while.
We're going to have to leave it there, but really looking forward to her publications with Bloomberg Economics, Anna Wong, and particularly sort of midstreamy here. We haven't got to the jobs report yet, but we'll get there as well. Dow down 160, S&P down 16 points in a market opening. We'll have to see there. Bitcoin moonshot 98,000.
Yeah, sure.
Lachman Hutchethon, he said, "I'm sorry. Manufacturing looks okay."
Manufacturing looks okay, and it's been in a recession here in the U.S. You look at some of the manufacturing PMIs below 50 for a long time, starting to edge a little bit above 50, showing a little bit of growth there.
Walked in this morning. You beat me in. I got in, folks, at 6:52 this morning, just barely able to start the show. Gold record high at the time.
Exactly.
Like I got the chart out and nudged up through.
Goldman Sachs out with that pretty aggressive call with 3,100 on gold. We're at 29.33 here, $2,933 an ounce. We've heard about it, from a lot of guests over the last 12, 18 months that it's been China, the central bank. Chinese consumers buying gold across the world. So it's been just a huge move higher. And that's Mike McGlone's call for years. Buy gold, short everything else in the commodity space.
How many times, Paul, since we've been doing this, have we heard, OMG, the economy's going to slow down?
Yeah.
It's got to be like 42 times in the last 36 months, coming out of COVID.
Yeah.
And we're here again.
Yep. And it goes to your point, Tom. Companies adapt, people adapt. And that's been the
chapter
story.
1.
Yeah. It's been true here. So we see some solid economic growth. You got unemployment at or near full employment here. Inflation coming down, as Anna Wong was just talking about. So it's a pretty solid economic backdrop for earnings.
Given the political maelstrom, the euro 1.0458. Not playing this morning. We're on YouTube. Subscribe to Bloomberg Podcasts, growing each and every day. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen, so let's take a little closer look using the IMAP function of your terminal. The 11 major industry groups, the biggest drag coming from consumer staples merchandise at the top. Wal-Mart, their shares down about 6%. That's followed by Costco down more than 1.5% and Target down 1%. We go over to the 2-year yield, 4.26%. That's little change. The yield on the 10-year, 4.51%, and that is down about 1 basis point. The Bloomberg Dollar Spot Index down about 0.3%. We move to shares of Airbus. They are lower, down more than 1.5%. It said it's going to deliver 820 aircraft in 2025, and that was the lower end of estimates. Then we have Mercedes down nearly 1% in Germany, warned of a sharp drop in earnings, plans to cut production costs by 10%. Renault, their shares slipping down more than 2.5% in Paris, forecasts an operating margin lower than last year. And finally, I have to point out Alibaba. Its ADRs up about 12%. Third quarter revenue topped estimates. After the close, we move on to Rivian and Block. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. It's too much Gina Martin Adams. I mean, it's like 4 days a week or something.
Never enough.
Is there such a thing as too
Her
much?
people called me up and said, can you put Gina on? She's got some messages for her. I said, okay, with Bloomberg Intelligence today on the equity markets. Gina, it's David Sowerby was in, and this is important. There are 58 analysts of Apple. I need the marginal opinion on Apple. David Sowerby is in from Detroit, and he's looking at Lakeland Industries, Decatur somewhere. Good morning, Lakeland, L-A-K-E, with 1,800 employees, and they have 2 analysts following him. Is the sell-side model broken now, where people can't discover mid-caps and small caps like you, me, and Paul back in the day?
Wow, it feels like a trap.
Yeah.
It feels like a trap, Tom. Look, I think naturally the attention has gone toward the bigger cap stocks, especially in recent years as they've dominated the performance. What I think we need to see, frankly, to get more coverage in the small and mid cap universe is some recovery in those equity markets. We've had 3 years in which small and mid caps have underperformed large caps en masse. So naturally, the preponderance of thought, the preponderance of attention has gone toward the biggest of the big cap stocks. In the case of Apple and the Mag 7, this is an even more profound conundrum because they are increasingly the companies that gobble up all the private entities that don't make it into the small cap index, so we don't have to cover them. We cover the fundamentals of Apple, Microsoft, the large Mag 7 companies, because they're the ones that are investing in the private sector, the private companies, before they make it to the public market.
A question for Paul Sweeney. Paul, do you think with the, like Katie Greifeld's article on Vanguard and the ETFs, have the ETFs taken us away from individual stock interest?
I just think the economics of Wall Street have taken away research coverage because the commissions have been coming down significantly. Research departments on Wall Street can't be supported by investment banking fees. So as a result, investment banks have pulled back in their research, which created the opportunity for Bloomberg Intelligence, which we now cover. Bloomberg Intelligence,
nice
440 analysts worldwide, covering over 2,000 companies in 130 industries globally. So, Gina, as we sit here, we're 80% away through earnings season here. What did you and your team, what have you seen with earnings so far?
Yeah, it's been a very solid earnings season. Earnings are on pace for 12.5% growth. That's well above the 7.5 or so expected at the start of the season. Most stocks and sectors are beating. A little bit less than the post-pandemic average beat rate, but nonetheless, generally pretty solid earnings season. Guidance has not been particularly positive, and revision momentum has been negative, and I think that's been weighing a little bit on stocks. So the setup coming into this earnings season was the problem, not necessarily that companies aren't doing well. They're just not doing well as the markets had anticipated, and that downward guidance and downward revisions has weighed a little bit. We're just not getting the lift out of earnings season that we would normally get.
Right.
Because expectations were so high already.
Are we seeing companies cautious in their guidance, maybe just saying, I'm not sure what's happening in Washington, D.C., and I'm not going to be putting out some guidance?
Yes, we are. We saw guidance momentum shift back into negative territory. Along with that, we've seen earnings estimate revision in negative territory for 26 of the last 28 weeks. I think some of this is just in the post-election environment. Right. We tried to price this enormous recovery emerging, and it's just not emerging that quickly. Right. And it may not emerge. And I think that we have to right-size those expectations. Right. Obviously, inflation is still a little bit problematic as well, because we're seeing operating margins are missing expectations. That's the one component of earnings that really just has not satisfied the consensus.
On Bloomberg Radio, you don't see this on YouTube, you see it. I'm wearing a pair of headphones here, and one of Gina's minions just whispered in my ear, ask her about the portfolio. How is the value portfolio doing?
Yeah. So we do a MVP strategy, which combines momentum, value, volatility, and profitability, gives you a more equal-weighted perspective on the S&P 500. Did fantastic relative to the equal weighted index last year, still trailing the overall market cap weighted index because of the construct of market cap. But that strategy has worked very, very well in an extremely uncertain environment.
You got a good Sharpe ratio on a risk reward basis?
So almost double the index, the Sharpe ratio.
Your Sharpe ratio's double the index?
Yeah. So fantastic.
When do we get a leveraged Gina Martin Adams?
ETF?
We've built that portfolio. Most interestingly, we built that portfolio for small caps as well. Okay. We do a double screen on profitability. So within the small cap index, the portfolio only isolates the profitable entities and then screens on momentum, value, volatility, and profitability, and that portfolio has done phenomenal.
This was successful. Can you come back tomorrow?
Yes, please. I would be happy to.
Thank you so much. We just get her because she's going up to the food court.
I know. She comes up the escalator. We wave her down.
She's getting her Lisa Mateo breakfast up in the food court, something healthy.
I know. Word has it that Lisa Mateo, for all her granola and yogurt, she'll steal a bowl of Captain Crunch every once in a while.
Oh, yeah.
Says who?
I can see it. Thank you to Lachlan Achathon. It was good to talk about the full Vermont breakfast today as well. Dow deteriorates, negative 170s become negative 261. S&P negative 17 becomes negative 25 as well. The VIX is just odd. I'm waiting for I'll be honest, folks, I don't trust the VIX print right now, 15.64. In the 10 o'clock hour, rumor has it you'll get Bitcoin talk. Paul Sweeney with Emily Graffeo coming up right now with the news in New York City. John Tucker.
And in an interview this morning, the Treasury Secretary Scott Bessent telling Bloomberg it was the Biden administration that's to blame for higher prices.
Now that I have the numbers on the inside, there was a big contributor to this massive inflation was regulation.
In an interview that you heard here on Bloomberg Radio, the Treasury Secretary also said terming out the national debt is a long way off. You can hear the entire interview on Bloomberg Talks podcast page. President Trump says a fresh trade deal with China possible as he touted his great relationship with Xi Jinping, but didn't provide further details. He was speaking to reporters on board Air Force One.
It's possible. Well, we did a great trade deal with China. We did it great for the farmers, great for manufacturers. They had to buy $50 billion worth of our product, and we were making them buy it. The problem is that Biden didn't push them to adhere to it.
His comments come just weeks after imposing tariffs on China, and a day after he hinted at new global tariffs on cars, semiconductors, and pharmaceutical imports. And President Trump turning further against Ukrainian President Volodymyr Zelensky. The president didn't invite Ukraine to negotiations with Russia on ending the war, and now Trump is calling Zelensky a dictator after the Ukrainian leader accused him of falling for Russian propaganda. The president discussed the war at the Future Investment Initiative Summit in Miami.
Europe has failed to bring peace, and Zelensky probably maybe he wants to keep the gravy train going. I don't know what's the problem, but he hasn't been able. He's very upset that he wasn't invited. He could have come if he wanted to, but that he wasn't invited to Saudi Arabia. But he's been working for 3 years. There's never been even meetings or phone calls to stop this war. It's a horrible thing.
Trump's turn against Zelensky leaves Ukraine with limited options. And President Trump said his administration intends to check out how much bullion is stored at Fort Knox, telling reporters he wants to make sure the gold is there, adding that if it's not, quote, we're going to be very upset. And that makes me think of this. Shirley Bassey, Goldfinger.
Do you realize I'm the only one in Midtown Manhattan who was old enough to remember that?
Shirley Bassey was a singer, by the way. Now comes word that Amazon, that was for Lisa, Amazon MGM Studios is inking a deal for the James Bond franchise rights. They'll gain creative control over the Bond franchise following closing of the deal. Global news, 24 hours a day. Whenever you want it with Bloomberg, I'm John Tucker.
Paul, have you been to Fort Knox?
No.
You know, I've never been.
No,
I don't even know where it is. It's like Kentucky.
Kentucky, right? Yeah.
It's maybe.
All right.
And then they store gold in the basement of the New York Fed downtown.
They do.
And also,
Lots
what
and
our guest?
lots.
Who's our guest? HSBC or who's our guest?
Yeah. And you know, and there's gold at 57th and 5th Avenue.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Good morning, everyone. Bloomberg surveillance here in New York. We called for a Bloomberg Business Flash here. Let me give it to you. The markets are open. That's our Bloomberg Business Flash. The Dow negative 274. With us right now is someone that really is twisted. She does cross-asset for us here. You can call it a macro review. Tatiana Dere is really quite good at this, and I'm thrilled that you covered gold. Okay, a lot of the analysis to me is sort of simplistic. Go beneath the simplistic here. What should our audience know about the durability of this rally in gold?
Well, I think, as you said, lots of speculation right now in the market, but I think we can zoom on to sort of two potent facts right now. And one is central bank buying, particularly out of China. If you look at the history there, when China starts buying, it keeps buying for several months. We've seen it buy for about 3 months now. Historically, it lasts about 10 to 18. During these stretches, price goes up. So I think we can still rely on central bank buying as a potent force for gold to continue to go up, and any sort of pullbacks on geopolitical speculation like Ukraine and peace talks to serve as an opportunity for the central banks who want to load up on gold. Obviously, the physical squeeze is playing a big role, and to some members of the M-Line team, that's the sort of the key reason why gold has gone up so much. But if you look at across factors, you have ETF buyers buying, you have central banks buying, and if you look at the performance in 2024, those two factors have really served as the biggest drivers for gold's 27% gain.
It's been extraordinary here. I mean, how about just across the risk market in general, stocks, bonds? I mean, a lot of folks are concerned about this equity market being, I don't know, overbought, being expensive. How do you guys think about it?
Yeah, so we're starting to flag a little bit of softening regional Fed data that we're starting to get, and I think risk assets are heavily overlooking that. So we're distracted with tariffs and the administration's policy, but perhaps we're overlooking the fact that uncertainty on the ground is already stopping some decision making.
Then why is the VIX 15?
Because it's not spilling over yet into hard data. We've been tricked by soft data before, right? It's not the first time, and regional Fed services are erratic, they're all over the place. But when we will start to finally see it in the hard data, perhaps in the jobs market, with the DOGE layoffs and some of these companies stopping hiring, or as we've heard from a string of companies, South Air, Chevron, CVS, they're laying off people also.
See how she drives the market? I mean, she starts speaking, and the VIX just printed 16.01. There you go. Tatiana Derry, thank you so much for moving the VIX.
I mean, on the VIX, I have to add that it's sleepy, and when it jumps, it jumps. Like the last time we've seen it jump, it was like a record jump. So that's something to keep in mind. It will pile up.
We watch it, Tom.
Tatiana, thank you so much. Greatly appreciate that this morning. All I know is that the Dow keeps going down, negative 288. On the Dow, 0.6% move. NASDAQ down a stick right now. That gets my. Did you see Carvana?
No. What's happening there?
I looked at. They have Tesla, the pickup truck thing.
Yeah.
They have those. They're like stuck in a snowdrift, can't get out.
Look at this
it's on Carvana.
Yeah, and the stock down big here today, down 14% here. And this
we
is
go to used car expert Lisa Mateo.
Exactly.
Have you ever used Carvana, Lisa? Are you sitting on the couch at home like everybody else?
I don't, but I have friends who use it. They say it's convenient. Like it just shows up in front of your house.
Shows up at your door. Yeah.
You don't have to haggle and go in there, in the
I didn't know
sales
this.
room.
You buy a car.
Yeah.
And it shows up.
It does. The truck comes out, drops it off in front of your house.
Maybe I'll do that for the fourth offspring.
Like if you're in Flint, Michigan in 1971 and you're listening to Grand Funk Railroad, you could have had a used car delivered to your door.
See?
I can segue from Carvana to Grand Funk Railroad like everyone.
There you go.
Tonight, Canada, U.S., Boston Garden. Good morning.